Are we good? We're not. We're not. We're not. Just hopped out the shower. Let's make sure this thing is working. Seems fine. Whoops, did not mean to do that. Then I forgot to get a link, right? Forgot to get the replay link. Go clip that stuff. What feels bad, mang? Should we call this? Sitting sideways. How about that? Sitting sideways. If you know that song, if you know, you know. Not too bad. In terms of getting caught up, I mean, we talked about this, right? We kind of talked about doing this kind of thing. Ding, ding. Down to the pixel, mind you. Literally. So you could have taken the short here, or could have tried the breakdown, right? And then we bounced right off the point of control from yesterday, right? Down to the fucking pixel, right to 786. So you had a couple of scalp opportunities, but other than that, we haven't really been doing a whole lot, right? Kind of just been ding-donging back and forth here. Yeah. Nothing really to talk about, right? I guess in terms of getting caught up, nothing really to talk about. Kind of the same spot we were sitting at yesterday, essentially. Oh, ETH had a little bit of a move here somewhat recently while I was eating dinner. Interestingly enough. Yeah. Let me just update our levels. Kind of get to it. And the trades haven't really changed either. So nothing to really, like that World Liberty financial thing, like got stopped out break even, so that's that. And that nothing has changed. I suspect most of this week will be like this, right? It's giving it's like Thanksgiving in the US. Not expecting some crazy moves on low volume, but who knows, right? Maybe we see some international manipulation. Because markets are closed on Thursday. And this Bybit's fucked up again. Just do it on our laptop. Interesting though, interesting that we ended up like defending this kind of zone. At least for now. It's a hard time frame looking. Interesting. Can we start breaking out from this thing? We're not. This thing gonna load or what? 8-7. Where did we open at? Oh, I'm so stupid. Seven, 8-3, 2-6-6. Okay, we'll go with, because this thing is, they're both fucking wrong. That's the thing. They're both fucking wrong. But this one makes more sense in terms of the POC. Okay, we'll do it with the desktop browser version, the desktop version. 7, 8, 7, 6, 4, 0. Oh. Hmm. We'll keep it adjusted for now. Okay. Let's close this thing for now. See what everything else is doing. So let's see if we can get a doctor's appointment, right? Let's give it another go for the 1000th time. Because your boy's shoulder is hurting. It's hurting, guys. I've not been bench pressing for like 2 weeks now. This is no joke. Boom, 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 boom. Oh, I'm so stupid. I'm like, where the fuck did it go? Where the fuck? Seemed like a crazy day today, right? The gap up on this was insane. God damn. Think we missed any news, but no, not really. Not really.
so cold it could chill your phone. Never rush moves, got the patience built in. One green flash and a profit locked in. Squad all sharp, yeah, the circle all win. Math on the board, that's the code we in. We don't miss no play. Nah, slow roll, win, stack racks all day. Yeah, move so clean, they just watch, can't say. West Coast cool, while the charts still sway. Trading with the gang, we don't miss no play. Never. Levels hit perfect, watch the candles obey. Yeah, Marco's in the cut, real calm, no spray. Yeah, we just count up while the rest gon' pray. Yeah, Marco's trades, cool moves, cold math. Gang eat together, always.
Yeah. Whole gang lit. Bags heavy. Marcos, let's ride. We in the charts with the crew that's back. Stack so tall, yeah, don't collapse. Lights on us while the beat goes slap. Every tray hit, now the bottles get cracked. Gang in the spot, we ain't missing no play. Money keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Deep in the zone, but we still gon' vibe. Trade flow heat when the club get live. Entries crisp, we don't chase that tide. Just wait for the move, then the gang gon' ride. Shorts get squeezed, yeah, we love that pop. Long take flight when the biz don't stop. From the charts to the flow, we connect that drop. Every move locked in, whole squad on top. We in the charts with the crew that's back. Stack so tall, yeah, don't collapse. Lights on us while the beat goes slap. Every tray hit, now the bottles get cracked. Gang in the spot, we ain't missing no play. Money keep dancing like it's on replay. Hands up high when we run that game. Profits go wild when they hear our name. Late night, nights, charts glow, gang tight. Move smart, play right. We gon' win all night. We in the charts with the crew that's facts. Stack so tall, yeah, don't collapse.
The AIX.
Every trade hit, now the bottles get cracked.
I swear that that's like a bot comment, yeah? Someone else said that recently. Same fucking thing.
Profits go wild when they hear our name. Late nights. Late nights.
We move risky, math in the clip, lifestyle 50-50. Yeah. Charts look calm, but the waves still deadly. High stake plays, every entry feel edgy. Cold eyes stare when the numbers turn heavy. Ice on my neck, but the trigger finger ready. Fade the herd, I don't follow no sheep. Yacht life days, but the grind don't sleep. High leverage shots, they gon' feel that heat. Price at my line, that's $1 million a week. We move risky, math like a drum, let it hit me. Clips both ways if they tempt me. Profits and pressures 50-50, yeah. Risky, lifestyle wild, but it fits me. Long nights turn to the Bentley keys. High stakes, high life, come get with me, yeah. Fake consensus, let the market talk slow. Shorts get squeezed while the Lambo top go. Feast on the charts, every candle I know. From the bottom now it's all high floors, no low. Count chips in the penthouse suite. Glass floor view while the city don't sleep. Ops mad cause my math too deep. Fibonacci lines cut clean through beef. We move risky, math like a drum, let it hit me. Clips both ways if they tempt me. Profits and pressures 50-50, yeah. Risky, lifestyle wild, but it fits me. Long nights turn to the Bentley keys. High stakes, high life, come get with me, yeah. Risky, but the math still clean. Charts in the streets both know what I mean.
Who has already bought? Interesting. We're getting spammed by YouTube bots in the chat now. Before, interesting enough, actually, the comments that we were getting on the old streams have stopped. So they definitely cracked down on that. Apparently not in the actual live stream comments. Interesting. Interesting. Thing is gone. Damn, this thing is already gone. Feels bad. Pretty similar setup brewing though on some of these other stuff.
Trading from the villa in Ibiza. Golden 10 shot up, no visa. Nah, cocktails mad sweet like a teaser. Woke up rich, now the view got deeper. Deeper.
Candle glow, sun on skin, limit hit, get a fib locked in. Poolside bag with a summer grin. Marco's trays, let the wins begin. Wi-Fi strong, but the vibe still lazy. Tings and bikinis, charts go crazy. 618, watch the bounce so wavy. Profit hit now, now the haters all shade. Lobster lunch, then a scalp for dessert. Villa got views and a bag come first. Don't need stress, just math that works. Summer in sync with the fib alert.
Trading from the villa in Ibiza. Golden 10 shot up, no visa. Cocktails mad sweet like a teaser. Woke up rich, now the view got deeper.
Candle glow, sun on skin. Limit hit, get a fib locked in. Poolside bag with a summer grin. Marco's trays, let the wins begin.
Chilling with the candles kiss. Golden pocket can't miss this bliss. Money moves in a sunrise mist. Math and vibes, what a mix. Trading from the villa in Ibiza.
Yeah, wrist on cold, but the chart got fever. Hot. No chase, just plan that's cleaner. Marco's moves like a summer leader.
Marco got the levels mapped out, that's facts. Fibs on chart, I'm loading at the cracks. 6-6 tap, I double my stack. Ops all green, then it all went black.
Golden
Bounce, price come dance. Hit that field, now I'm in advance. Entry sweet like a late night text. Wick touch deep, now the chart say blessed. Golden bounce, hold then run. Math got me armed like I'm holding a drum. .618, the base for the kill. Stack gets bigger when the wick get real. I don't flinch, I don't blink when it hit. 702, I'm sitting in the pit. Trap line hidden, tag that price. Order get filled, chart looking nice. I might ladder from the 6-6 clean. Then that more down to 7-8 mean. Pull back wicked, op start stress. I stay cool, that wick so blessed. She roll my wood while I count these racks. Price touch once, ain't never come back. We don't chase, we place then chill. Golden pocket, got that thrill. Golden bounce, price come dance. Hit that field, now I'm in advance. Entry sweet like a late night text. Wick touch deep, now the chart say blessed. Golden bounce, hold then run. Math got me armed like I'm holding a drum. 618, yeah, that sparked my thrill. 7-5 hit, I'm way too chill. Pull back, moving like you know my play. I'm just chilling, watch the tape replay. They rush bys, I'll wait for the K. Get that field, then chart obey. 6-6 fib, got ops in fear. Price bounce off it, then disappear. Marcos don't flinch, Marcos don't sweat. Big field hit, it ain't touched yet. Bad bitch with me rolling up again. I'm just laughing, looking at the 7-2 bend. Wick come kissing that deep retrace. I just flipped that back to base. Golden bounce, price come dance. Hit that fib, now I'm in advance. Entry sweet like a late night text. Wick touch deep, now the chart say bless. Golden bounce, hold then run. Math got me armed like I'm holding now the trap gon' steal. That field was major, now watch me chill. Stack get fat when I play them zones. Fibs on point like I'm throwing stone. Golden pocket, luxury trap. They want vibes, I want math.
Yeah, Marcos, you sure of that? Ha! Bottom in, baby. Now we dancing. Short the floor, you crazy. Price went moon, now you shaky. I bought low, now it pay me. You went short, now you hate me. Mad short, my you do that. Now you crying in your group chat. Not so tight, I don't do cap. Caught that wig, now I flew past. They said bearish, I said bet. Tap that fib, then place the nets. While they panic, I just flex. Profit hit, I cut the check. You fight trend, I just dance. Hit one trade, now I'm in France. Shorted lows, that's no chance. Now your funds wearing sweatpants, bro. Short the floor, you crazy. Price went moon, now you shaky. I bought low, now it pay me. You went short.
What the fuck is this? Oh wow, interesting. Interesting. Bum, 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 bum.
Cold man, war man, war man, dance it. Now they feel it. Feel good. Came up solid, now the screen glow. Midnight charts for the world slow. Profit hit, watch the pace grow. Made it off the map, not the bankroll. Stress built, I ain't fold. Used to pray for a line to hold. Now the villa got marble floors. Made it from the noise with the charts I spoke.
It's the same account.
They ain't care. Now they DM like save me a chair.
Interesting.
Screen in the dark. Now the room glow blue from the charts. No flex, this is life on code. No guess, this is levels I wrote. Fib drawn like a sniper scope. Price hit pixel, then it flow. Jet black whip through the market zone. Limit order set, then I'm gone. Trade talk quiet, bank roll loud. I'm moving decimals, not in crowds. Came up solid, now the screen glow. Midnight charts for the world slow. Profit here, watch the pace grow. Made it up the map, not the bankroll. Stress built, I ain't fold. Used to pray for a line to hold. Now the villa got marble floors. Made it from the noise with the charts I spoke.
Special. I was just reflecting in the last couple, giving them the tools to do it the way they're thinking.
Soda, the longer the time, awesome. Hey everyone, welcome back to Release Notes. My name is Logan Kilpatrick. I'm on the Google DeepMind team. Today we're joined by Sundar Pichai, who is the CEO of Google and Alphabet, and we're sitting here in Mountain View. Gemini 3 has rolled out, Nano Banana Pro has rolled out, and the reception's been super positive. So I feel like you want to sort of frame the moment of this progress to get to today, where we sort of have state-of-the-art models across, not actually just Gemini and Nano Banana Pro, but Veo and some of the other music models and stuff like that across the board. It's like more and more Soda the longer the time goes on. So yeah, you want to frame that moment for us?
Well, first of all, great to be here. It's been a phenomenal week, I would say. You know, when you're working on stuff inside, you kind of visualize the moment when you can actually put it all out. And when you work on products, there's nothing more exciting than that, and that's what this week is. But I think it's based on a foundation over many, many years and of all the deep investments we built. And it was always clear to me. You could see the pace at which we were making progress. But to see it all come together, it is really special. I was just reflecting in the last couple of weeks. I think we've pretty much been shipping something every day. And so it's a great feeling.
It is. Yeah, I remember back to you and I were talking probably a year and a half ago, and I was complaining about something. I'm sure I was complaining about something, and you were like, something to the effect of like pushing me to sort of see this long-term perspective. And I'm curious, like I think obviously to me the story of like getting to this moment that we're in now with state-of-the-art models and all this infrastructure to scale up Gemini across Google, like is this long-term perspective. And I think especially in this hyper-competitive moment, like what are you like how are you keeping that long-term perspective? And like because it feels so much like a rat race right now in some sense to like keep hill climbing 1% on all these leaderboards, but obviously that long-term perspective is super helpful.
No, I think I've always, I always force myself. You're obviously in the moment. We work in an industry where you move fast, you want to trade fast, and I really enjoy that. But being able to pull back and making this long-term bets and being very focused over that time period on a long-term bet, I think it's always super important to do. I think, and obviously in 2016, I wanted the whole company to be AI first. A lot of what prompted that moment was 2012 was Google Brain, the famous cat paper, which had breakthrough in image classification. 2014, we brought Google DeepMind in. January 2016 was the AlphaGo moment. And now many people didn't notice, in May 2016, we announced our first TPU.
Yeah.
So it was clear to me in 2016, seeing all that, we are about to go through another platform shift. And that was the bet on, a full stack bet on setting up Google to be an AI first company. And since then, we've been making a lot of progress. There's so many breakthroughs coming from Google, including Transformer. We were putting it in our products in BERT and MUM and making search better, launch Google Photos and so on. But obviously with the generative AI moment, I realized the window was even bigger. The people were ready to use the technology at scale, consumers, developers, and so on. So how do you respond to a moment like that? And for us, it was about, we kicked off Gemini as a project, and across Google Brain and Google DeepMind. And as part of that, then deciding to bring the teams together as Google DeepMind, we really ramped up our investments in our infrastructure, data centers, TPUs, GPUs, and so on. It is then getting the company to more of a faster cadence. Right, you now have the technology, and once the GDM team started shipping Gemini, and you can talk about the series of Gemini milestones we worked through, and it's been great to have you for a lot of the journey, driving it too. And now, how do you make sure you manifest it in all our products? We many products which touch billions of users, right? How do you get search to iterate with the power of all these models can do? And so that's been the journey. But you can step back and understand that framework, and it's so exciting because for the first time, you have many full stack approach. Each layer, when it innovates, it flows through all the way on the top.
This is what I tell people about pre-training. I'm like, the fact that pre-training for DeepMind is working so well in the Gemini models, it's like post-training and RL is like this accelerant of the underlying capability. And I feel like our infrastructure is a similar story.
Absolutely. You make your infrastructure better. You make the models better, pre-training, post-training, test time compute, where have you? Or how do you take those capabilities and then manifest it in products, right? How does Nano Banana show up in your products? Generative UI in search with AI mode, right? So you're expressing it at all these layers, and not to mention being able to take that and give it to developers who are then innovating on top, right? And that's what creates this multiplicative effect, and it's always incredibly thrilling to watch. But I've always had this long-term vision of how we can do it. Some of this took time because we have a full stack approach. When we had to respond to this Gen AI moment, we were short on capacity. So when we had to invest to ramp up all these things to get it to the scale. So you had a fixed cost around it. So if you were on the outside, it looked like we were quiet or we were behind, but we were putting all the building blocks in place and then executing on top of it. We're on the other side now, right? And which is what you can see the pace at which teams are moving forward.
Yeah, it's been incredible to see this. You mentioned this, like Gemini showing up in all of our products, and I think I was talking to Josh and Tulsi about this and Corey about this. I feel like the challenge for some of these launches now is sim shipping, and maybe not even from a product perspective, but capacity and the sort of how do you make sure that the models show up really well across all these different product experiences. I feel like it's introduced a new, like we've almost, Corey made the comment something to the effect of like,
These fucking bots, what the
more than we
fuck?
need to do, but like pulling down across all of Google's
You
products.
ban these people or what?
And it gets me to this, and I sort of had this realization at I/O this year of, and I want to gut check this with you because I don't maybe you have a different perspective, but historically, like other than maybe your Gaia or your Google account, there wasn't this through line across like this whole suite of different products that Google has, everything from cloud to Waymo to search to everything else to Gmail. And now it feels like Gemini is this through line across literally every single one of our products, which is just such a, it feels like there's something magic there that is happening. I don't know what your reaction is to that.
I think Gemini, I know it's a good observation. I think Gemini to me is like a much more, it's a very clear manifestation of what is the AI first strategy.
Yeah.
So now you have something tangible like Gemini, which people can understand. And Gemini, you're right, improves everything from search to YouTube to cloud to Waymo. What I loved about the Gemini 3 launch, you talked about sim shipping. We shipped it across many of our products. But it was fascinating for me to see, on X, it could be Copilot or Replit or Figma. People all coming together, they're also sim shipping.
Yeah.
Right? And to me, that's innovation at scale. Right? It's not just us. It's other companies in the world. It's been extraordinary to see.
Yeah, it's awesome. One of the other threads, and obviously the Nano Banana Pro moment, I'm sure you spend much time playing with the model. People are going crazy with it, which is awesome.
I have to keep asking, did we improve the productivity of the world? or is it like is it a net progress or not? The infographics seem amazing.
They do.
And I think as we move beyond the fun stage, I just saw on X, I think Ben Bajarin had tweeted this infographic of his core weave analysis. So, it actually made me look through that thing to try and understand it. One of the things PowerPoint many years ago unleashed is people kept making more and more slides. Like now, it's just got so much information, and it kept expanding. Like maybe with Nano Banana Pro, we're back to a phase by which you can kind of compress it and give it to the world in a more digestible way.
Yeah, that was going to be exactly where I was going. Like, there's something I've historically been personally skeptical about, like how useful a lot of the Gen Media models would be for the world. Like, obviously, it's useful from an entertainment perspective, but it felt like Nano Banana Pro crossed the chasm, specifically with infographics and actually grounding with Google Search in that. Of like actually, like I believe I can see very clearly how this is part of Google's mission of like organizing the world's information and actually making it universally accessible to people with those infographics. Like it blew me away. Like it was so interesting, and I feel like it's a great reminder of like we're gonna see those use cases. And I think the Nano Banana team, if I remember correctly from one of the pieces of content we were doing, they're like, yeah, we weren't even like, it's not like they were trying to make infographics work really well. It just happened as the model got really good and text rendering capabilities improved so much, which is fascinating.
Fascinating. The other thing it shows me is how much latent creativity is there in the world.
Yeah.
So one of the other beautiful things we're witnessing is I think like people are going to express themselves, and we're giving them the tools to do it the way they're thinking it in their head, right? And so I think if, otherwise we've been constrained by the tools in front of people. We may not have realized it, but we're creating more and more expressive tools, and they're more and more accessible to more and more people. And so watching that, it's incredible to see as well.
Yeah, I've got another question about that in a second, but one of I'll give Tulsi credit for this. Tulsi had suggested when we were talking yesterday to ask you about this because she was curious what sort of like as you see these launches happen in these like large tentpole moments for Google, what is your success barometer for these moments? Is it like the reception online? Is it like what does the adoption look like on day one, or like how are you measuring like is this thing actually moving the needle for Google?
Look, I'm pretty active on launch day, trying to understand what's working. I'm looking for feedback. Both, an example, I'm on X, trying to understand, like, CS people, average users, how they're experiencing the product. I probably bring people back saying, look, there's a valid point, we should address it. So in some sense, I'm looking at that, trying to assess it. It's clear to me teams internally are using Gemini itself to kind of collate, we have great dashboards. And so I try to take in across a variety of sources. I'm one of those people, I need to feel it firsthand, right?
Yep.
So I get reports, but I'm out there trying to understand how people are using it, what they're posting, right? And, and I think that is important. But I walk over to some people who all have these big screens with multiple dashboards, looking at QPS and understanding how the usage is, worry about capacity. But all that gives you a real sense of what people are doing, saying. But that's how I do it. It's a combination of monitoring stuff online, talking to people, walking around, sitting down with people. I want to get, particularly the first day, it really helps me get a sense of what's working, what's not working well.
Yeah, I feel like you can feel the excitement in the office right now too.
I can't walk out anywhere without some version of some banana.
I don't know who did that, but kudos to the events or facilities team for somehow bringing 100,000 bananas into this building and making it happen. The exciting part is this is just sort of the first chapter or the first page of the Gemini 3 chapter. We don't have Flash yet. We don't have any of our other sort of models in the 3.0 category. We shipped Gemini 2.5 Pro, and actually, as I was looking at a bunch of the benchmarks, like even 2.5 Pro is now so done everything. Obviously, competitors have caught up, but even 2.5 Pro right now is still like best in class at a bunch of capabilities and sort of taking it a step farther with 3 Pro now.
2.5 Pro was Google I/O, yeah, and you could sense that it was a big step up. I think one way I feel great is, and MS Cora and team, the GDM team is on a good cadence, right? So we are kind of every 6 months or so pushing that frontier, and it gets harder, right? Because you're right. 2.5 Pro is a very good model. So to kind of clearly take a meaningful leap from that, I think it's hard, but that's what that's what makes it exciting progress. I know you're always excited about Flash, which is working on and it's coming. You're excited about Flash because it allows you to serve more people.
Yeah.
And in that parade of frontier, it really makes a difference. So I'm excited for 3.0 Flash. I think it's going to be a very, very good model. Might be our best one yet, right? And we'll see. What's great is teams are internally. Our pre-training teams are thinking about the next version, and so this culture of relentlessly innovating and shipping, I think makes this moment special. And definitely feels like there's going to be a lot of exciting progress going back to the full stack at all layers of the stack as we go into 2026.
Yeah, I have a goofy question because
models,
Josh sort of inspired me with his goofy answer about launch day rituals.
With his dry Cheerios?
With his dry Cheerios, which is weird. And I need to keep putting Josh on blast because I think it's funny and it's.
I'm like, next time I see Josh, I'm going to be walking around with a carton of milk to
help him so that he doesn't have to eat dry Cheerios anymore. Do you have any weird, interesting launch day rituals, or is it just trying to make it through the day?
Yeah, it's normally, I mean, the morning ritual I almost always have is I kind of pick up and catch up on what's happening in the world.
Yeah.
I consume. In fact, I don't even check like Google email because the way I think about it is if something interesting has happened about Google, it'll be there in the news anyway. So I kind of like try to step back and take in the news. That's what I do. So launch day ritual becomes our products, and when we're in the news. So trying to understand to your earlier question about how it's worked. So that's my main routine, and I kind of try on launch days to have a bit of a less structured day so that I can go spend it time. I love walking to the teams which worked on the products, maybe seeing them, seeing how they feel about what they shipped. So that engagement to me matters a lot. Yeah.
Yeah. I have another sort of question along this line, which is I have an interesting observation. I think Dennis and others have talked about this maybe internally, but there's this micro kitchen inside of the Grading Canopy office where a lot of the sort of action is happening from a DeepMind perspective. And every time I'm there, it makes obviously Google is big and it's huge and global, and there's all this stuff happening. The MK, that blue MK, makes Google feel small to me, and I'm curious if there's like something interesting there, which is like how it feels small and intimate. And I'm curious how you.
Oh, it so reminds me of early Google.
Yeah.
Obviously, I go there quite often, and it could be you have Sergey there, and you have people like Jeff and Sanjay pair program still, and they're making their espressos. Nothing encapsulates our culture better than watching the precision with which people make their espressos in that micro kitchen, right? I would never dare make an espresso there, right? I know a lot about how to make good espresso, but I feel a bit intimidated, amongst that group. But Gnome is there, Cora, Oriole. Just last week alone, walking around, it's very dense in talent. Constantly people are visiting. There's a very great exchange of ideas, and so I love that. Kind of reminds me of how the company used to be in our early days. Some of our serving team, Emma and people are there, and that's where when I mentioned I'll probably go look at the QPS. It's I'm hovering over these people's screens trying to understand what's going on. So it's definitely a favorite part of I think how the company works.
Yeah, my Google feature request is we need to somehow remake these MKs across all the PAs or something like that. I don't know how that happens.
I mean, there are there are other teams which have versions of these, and I think it really helps pull people back into the office because you realize the value for when you're there. That exchange of ideas. You can still go back and have focused time wherever you're working, but that moment really helps a lot, I think.
Yeah. A lot of this AI story that you've talked about so far has been like us making these really, really long-term investments and sort of setting the company up for success like 10 years ago. And I'm curious how you think about like right now, or obviously, and the bets are right. Like Cloud has worked out really well. Waymo's worked out really well. Quantum hopefully will work out really well. Just announced a bunch of other the Quantum stuff goes over my head, but I keep vibe coding experiences to try to understand what they're talking about.
It was one of the ways in which I was like testing, asking Gemini 3 to help understand a layer deeper on these topics, which is fascinating.
Yeah, it brings anything to life, which I'm happy we went with that tagline. But how do you think about like is it just like infrastructure that's like this next 10-year bet, or like do we know AI is the thing, so that's what all the eggs are in that basket now, or like I'm curious how you think about like what are the next future-facing 10 years look like, and we're making the bets now to set ourselves up for that next layer of success.
Oh, look, I think it's always important, right? Going 10 years back, it was a bet on AI, in a deep way, in a full stack way. It was a bet on saying we're going to build other big new businesses, diversifying the company. Bet on YouTube, betting on cloud. Google was as cloud native as a company you could never imagine, but we weren't fully providing it outside. So that was a deep, big scale bet on cloud. And Waymo, these things take time. Waymo is a long bet, and I think we are now seeing the inflection point around Waymo. There's always these future bets, right? Quantum computing is an amazing bet. I think in about 5 years we'll be having breathless excitement about quantum, hopefully, like we're having with AI today. But I'm constantly thinking in that time frame. One example of this is Project Suncatcher. 2 weeks ago, where we announced we're going to build data centers in space. Obviously, it's a moonshot. Some of it looks crazy today, but when you truly step back and envision the amount of compute we're going to need, it starts making sense. And it's a matter of time. And so how do you make progress on that? You work back and have 27 milestones and get underway. So in 2027, hopefully we'll have some TPU somewhere in space. Maybe we'll meet a Tesla Roadster, which is going around there too, so it'll be fun. But that's an example of the kind of long-term projects you want to undertake and do. Isomorphic with AlphaFold and Wing with drone delivery. We are hooking up exciting work on robotics. So you take that long-term view and keep making progress.
When I saw TPUs going to space, I pinged Demis and I said we should fund a moon rover and put Gemini on device and then have it sort of explore the moon. It'd be a great marketing campaign, even if it's not scientifically super useful. So
Who knows? Maybe the product is underway somewhere.
yeah, I'm sure it is. You mentioned this thread before, which is the capabilities continuing to go up, sort of like raising the floor for everyone to go and be creative. And I actually personally feel this way. Like I don't feel super like artistically creative by default, and yet I can like tackle these tasks that historically I would have had to have done. And it empowers me. Like I feel like I've actually become more creative in like the way I think about the world because of these tools and like not being worried about not
Can we
being able
flip
to do
this
something.
bitch
I think
or
vibe coding is this
no?
like massive one, and there's this like moment
Rewind
to
that
be
a
creative and
second.
like the way I think about the world because of these tools and like not being worried about not being able to do something. I think vibe coding is this like massive one, and there's this like moment where this force that is like one of the most economically powerful things in history, which is creating software and being able to code, is now in reach of so many more people. And I'm curious how you obviously you do vibe code sometimes. I'm curious how you've been thinking about that moment of like AI builders being able to more than just like traditional software engineers be able to build stuff.
What an exciting moment. It's almost like how the internet, suddenly blogs appeared. Many more people became writers, if you will, right? And what YouTube did, many more people became creators. And you can feel that happening on the coding side. Even within Google, there's a sharp increase in a set of people who have submitted their first CLs, right? And it's because of these tools that are making it more accessible, right? Maybe you're a product marketing person, you have an idea. In the past, you would have to describe it. Now, maybe you're kind of vibe coding it a little bit and showing it to people. So you can tangibly see that, come to work. I was just speaking with someone on my team who doesn't code, but was trying to teach his son Spanish conjugation and just like, one-shotted in Gemini 3 animated HTML page to describe this to his son. See, when you hear stories like that, and that person is in our comms team, right? So you can kind of see how people are beginning to do things. And so it's very, very promising. The limited time I have and I played around with it, it's almost like, just not just white coding, but just these IDEs now. It's making coding so much more enjoyable, right? Like, of course, I'm not working on large code bases where you have to really get it right. The security has to be there. So, those people should weigh in. But I definitely I feel things are getting more approachable. It's getting exciting again. And the amazing thing is it's only going to get better. There's something I always used to tell about Waymo whenever people talk to me about it. Remember, this is the worst Waymo will ever drive, right? It'll only get better.
Yeah.
It's a version of all these tools which we're doing. White coding with Gemini 3 in AI Studio, it's both amazing to see and it's the worst it'll ever be.
Yeah.
Right? Both are simultaneously true. And so, I mean, in a sense that you're going to see a lot of progress ahead. So I think it's definitely an exciting time and can't wait to see what people out there in the world come up with it.
Yeah, it is awesome. I think my last question is like, what's next? What can we be excited for? Lots of cool things in the pipeline, but anything top of mind?
I think some folks need some sleep. I probably, hopefully the
Both
teams,
of us.
the teams, all of us, get a bit of rest. But look, I think I'm excited for the Gemini roadmap. I'm excited at how it's coming through all our products. We're also shipping new things, right? I love Flow. I've been playing around with Flow, Notebook LM. It has a passionate, growing community, and it's amazing, seeing journalists like work on it, people doing their PhDs, like really doing all the research in it. So there's a lot more to come.
I'm excited. Thank you, Sundar, for sitting down. And thank you, everyone, for watching Release Notes. We'll see you in the next episode.
Interesting video right there, right? Nice little 30-minute Google interview.
Or nothing changes. 2 weeks. So be 2 days around, I'll say anything until then, business as usual. So ETH, same deal, slightly stronger, but 3,000 psychological resistance, rejecting the price initially. If I want to be zoomed in, I'm watching, can the ETH bears confirm a 4-hour downtrend? Bitcoin already did it. So Bitcoin's in a little 4-hour downtrend right now, little dinky pivots. ETH
Did they
BTC
talk one
proved
thing
to me
interesting
something
on
is different.
here?
I was watching this bull trying to hold support. Obviously, all the platforms. The end of December for those names to bounce.
Doesn't seem like it.
Hey, buddy, I'm trying to name.
They chase, I calculate. Marcos made it off the way to the tape. Marcos. Island breeze, charties, we up the noblest. Me catch the long, me never stress. 39, me eyes on sky. Fibonacci levels and price gon' fly.
Appearances on CNBC and Bloomberg.
It's all mob rules. When the mob decides to sell, it's going out. When the mob decides to buy, it's going up. And you have to find whatever way is comfortable for you to predict when that's happening and catch whatever piece of it you could. We all make money when the mob agrees with us. So we have to find those periods of time when the mob does.
Introducing Bobby Iacchino, an ex-CME floor trader with a verified track record approaching a decade. On US national TV, Bobby is the go-to guy to turn complicated market conditions into simple trade ideas. And in this episode, Bobby explains exactly why most retail traders think backwards and how to fix it.
I could look over there and there was Goldman Sachs. I could look over there and there was JP Morgan. I knew who was doing things. And I knew whether those things would matter or not. So I would stay in a trade based on what's sitting around. That was gone when I left the floor. So I had to completely reinvent myself. So now we've researched a multitude of different dollars to find out how close the two highs need to be together in the case of a double top, where the proper entry is, what the measure move targets, which ones work the best. If we're measuring out a measure move target from the right-hand low of a double bottom to peak, okay, then you have your extensions, you have your retracements and down levels, 37.5. If it breaks that, it's breaking the whole thing with very high probability.
You don't believe in buy low, sell high, which is usually trading 101. Your philosophy therefore becomes buy high and sell high. Why do you think that your old thought this land? And I think you mentioned in 30 years, only 4 times you bought low, sell high.
My philosophy is
Ladies and gents, welcome back to another episode. Bobby, good to have you. I want to start off with, I've been watching a few of your appearances and you've had many. And one thing that stood out to me is you don't believe in buy low, sell high, which is usually trading 101, and your philosophy therefore becomes buy high and sell high. With that in mind, why do you think that we're all taught this way? And I think you mentioned in 30 years, only 4 times you bought low and sold high. Why are you actually a non-conformist, or why is this the approach?
I think that's the approach essentially every winning trader and active investor takes. They just don't know it. The amount of opportunities you get to buy the exact low leads you to this sort of failure mentality, right? Well, the low was, and let's just pick a number out of here, 65.30. I bought 65.36. You didn't buy the low, right? My philosophy is if a move goes from 0 to 100, I buy at 25 and I sell at 75. That's what I'm trying to do. The amount of times I've waited for the exact high or where I thought the top was, A, I've been wrong half the time, and B, I missed it the other half the time. In other words, I went to a tie, turned around, and either stopped me out or gave me a lower profit than I thought I would have had, or it continued after I sold it. Either way, I'm wrong. So I try to leave it into a situation where the trade takes care of itself, and I'm not right nor wrong. I'm right if I follow my process. I'm wrong if I don't.
I think one of the main reasons people would look to buy low is the potential of asymmetrical gain. You can a good risk to reward. Do you think that's a fallacy, therefore?
To a certain degree. I mean, I'm sure there's people out there that have an edge, that they're able to figure, okay, the selling is done, I can buy here, or the buying is done, I can sell here. I'm sure that exists. Doesn't work for me. I have sort of a weird situation where initially when I get in a trade, it goes against me. Again, this is not a studied percentage, but probably 70% of the time, it immediately goes against me.
Okay.
So I don't manage that.
Is it because buying low implies there's a bit of a fall in life going on, you're trying to catch the low, and that becomes the danger?
Yeah, I mean, as something's falling, tell me the low. I don't know what it is. I don't think you do either. You can buy at support and be right, but there's a difference between support and significant support or significant levels. We use significant levels a lot. When you talk about people who are actively trading, to me that's anywhere inside of 6 months. So my average hold time, for example, is 26 days. Right? Sometimes I'm about to trade in 6 hours, sometimes I'm about to trade in 6 months. That averages out to be about 26 days. So at what point was the low? Was it the day that I bought it, the hour that I bought it, the week that I bought it, the 26-day period that I bought it? What was the low? So I just think it's a silly thing to look for. That's one of those things that, it was in movies. Buy low, sell high. Okay, well that must be what works. Things in movies generally aren't what plays out in real life.
You just mentioned 26 days average hold time. When we rewind back to the 90s when the trading floor, it was 2 minutes.
Yeah.
So over the last 30 years, you went from a 1 minute kind of time frame trader zooming out to daily and weekly. Why has that been the natural transition for you?
It was a painful process, to be truthful about it. Like, I left the trading floor in 2004. Over the last 5 years of that trading experience, my biggest year ever was 9/11, 2001. That was my biggest year. That bothered me on an emotional level, that I made so much money when so many people died. And it was because the volatility came back. And as the volatility was leaving the trading floor, I found that the quick in and out wasn't an edge for me anymore at all. So what I started to do was to shrink my position sizes down and expand my time horizons out. And as I did that, the activity in between where I would stop myself out and take profit began to bother me less and less and less. And that's how that kind of played out. So it was a painful process at first. I thought I could go to my garage office in Pacific Palisades, California, and just trade the same way I did. Buy here, sell here, try to scratch. Didn't work at all. I didn't have the stimuli of the trading floor. I didn't have there's sounds on the trading floor that you hear. So sold or buy them sounds differently than just a click on a screen or a beep on a screen. So you could hear a certain tone of voice and you would know if it was aggressive selling or soft selling. I realized that later, not at the time.
With the it's an echo chamber, it's the trading floor that you have, but with the sentiment on the trading floor assist you. Is that what you're referring to?
Absolutely. It drove me, actually. I mean, you'd be able to look and see if a guy was just, we call it one-lining it. You have people with stop orders and the price would trade, you look down at the pit and go, it was a one lot. Don't worry about it, it was a one lot.
Okay.
Right? And then all of a sudden you'd see 500 go through and you knew your stop was going to be elected. Right? That was different. And the sound was different than when they traded a one lot. So it not only was part of the effect for me to trade, it was an absolute driver. And if you heard just a big push of sold, and it was, you never really knew what was going on in a big fast market in the pit until a few minutes later. So for example, let's say that somebody was out there offering 5s, and you'd see everybody like this, right? And then a news event would come out. You'd see it go 2, 1, 0, 4, 3. Well, what 4? Is it 24? Is it 14? Is it 04? You just knew 4 was the thing now, from 5 to 4, but what level of 4? So it was a lot more about the sound and where it would sort of slow down and where things were up and slow down. On the screen, you can see that flash, right? You can see it tick down and flash down. You know where it's going to stop, but there's no sound.
In the previous environment, you probably had the team around you, so camaraderie, maybe even some accountability, maybe some locker room antics, like it's a wild mix. But then also you probably had your seniors who were maybe guiding you, advising you, mentoring you, advising on risk or cut-offs for you. So there's a lot of team spirit going on. And I guess now most traders are a lone wolf approach, where all of those decisions are on themselves, and where once again, you ruminate in the same piece and they can now say your direction. Giving a team mentality to team training is a pro.
Where is our... Here we go.
Work on.
That's interesting. I'd say it's probably more of a con now.
Why now, specifically?
Well, because you have to follow your own process that's been tested by you. And one of the problems with having a team or people around you is they influence you. Okay, back in the trading floor it was mob mentality. It's still mob mentality now, but you see it more on the charts than you do in the room you're in. Okay, that's the way I look at charts now. Is when I see a big, I call these emotional candles. It's a big candle in either direction or a candle with an excessively large wick for the particular asset you're looking at.
Around news or could print
Doesn't matter to me what happens. We'll go into this in a minute, but back to your question. If somebody says I'm buying a euro and you went in looking for a sell in euro, right? There's enough people saying, well, I'm gonna buy it, you start to question your sell. Now your sell may be based on a process that you back tested, use Monte Carlo simulations. You know that you're supposed to do this, but you say one of two things. Maybe I should be buying, or maybe I can sell higher. Imagine what I just said about my own process. If I buy something, it generally goes against me before it moves in my direction. I'm listening to a bunch of other people. Yeah, maybe I get a better price, but also maybe I missed the trade I was supposed to do. Your job as a trader is to put on every good trade that you see, period. That's your job, regardless of the stimuli around you, based on your process. If you miss one for whatever reason that is not calculated in your own process, you have made a mistake. And sometimes having a team around you who disagrees with you or possibly encourages you when your signal is not fully developed, you've made a mistake.
Let's explore this idea you said of mob mentality from the charts. What do you mean by that?
When I see, again, an emotional candle, right? Some people might call it stop triggering, some people might call it order flow. It doesn't matter to me why something's happening. If I see a very large candle next to a bunch of smaller candles, there's emotion in there. There's price action and emotion. Could be caused by stops, could be caused by an accumulation of buyers, could be caused by institutions coming in, whatever it is, there's emotion. If I see several emotional candles on a chart that match up the same area, that becomes a significant area to me. Significant levels are created by emotional candles on a chart. So A lot of people trade off of support and resistance. I ignore simple support and resistance, an old high, a place where you got a bottoming pattern, and I look for emotional candles that match up to support and resistance, and those take precedent over just vanilla support and resistance for me.
Let's take a moment to talk about part of the show, a leading prop firm that is Funded Next. I suppose we need to listen to our community to see who you're working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale at affordable prices. And Funded Next has ticked all of those boxes. Not only being a top 3 prop firm in the industry, also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliability is the most important factor, an important guarantee that they have is that if you do not receive a payout within 24 hours, they will give you an additional $1,000 to your payout just for being late. So to unlock all of these benefits and work with a leading prop firm in the industry, Funded Next, check out the link in the description or use the code TOT. This thing both ways, this emotional candle idea, because you can have this accumulation, and this is now the big players, the institutions getting in, and it's going to be buy signal. At the same time, it could be around support level, but it's emotional candles breaking through support, hence, and then whipsaws, hence manipulation. Which one excites you more or brings more curiosity, and can we also explain what is the difference between these things in terms of mechanics behind it?
Yeah, watching your show, you're really good at these questions. That's a great question. So a candle shows you 3 things: an open, a high, and a close, and a low, right? The most important thing is the close on any time frame, because that is where the market has decided fair value is for that particular period of time. There's hundreds of thousands of traders that look at 1-minute charts, hundreds of thousands that look at 5, 15, 30, 4 hour, 6 hour, daily, weekly, monthly.
Yes.
In each one of those time periods, the market has decided on fair value price at the end of that period. So that matters to me the most. Now, a long wick can meet a significant level and collapse. The market could go through a significant level and then close below it. That also shows significance. So there's a little bit of an art to it, right? The close matters the most to me. There's been multiple times where I've seen market close above or below a significant level, and then they immediately reverse below it because it was a head fake. The close didn't work. That particular close didn't work.
Okay.
I used to teach. I don't teach anymore. But I had a student once tell me that means everything can be a significant level. No, it doesn't, because it happens multiple times over your chart period, whatever chart time frame you like. Times where I've seen market could go through a significant level and then close below it. So that matters to me the most. Now, a long
This
wick
guy's been watching your boy, right? Taking notes from your fucking boy.
That also shows significance. There's a little bit of art to it, right?
Don't get
Close matters
God,
the most.
right? Wait for the
Multiple times where I've seen market
close.
above or below a significant level, and then they immediately reverse below it because it was a head fake. The close didn't work. That particular close didn't work. I used to teach. I don't teach anymore. But I had a student once tell me that means everything can be a significant level. No, it doesn't, because it happens multiple times over your chart period, whatever chart time frame you like, and you see it. Regular price action through a level doesn't matter to me. It has to be through a significant level.
I want to explore this candle close philosophy because I want to think about what is a candle. Well, first, what's price? Price is you go second for second, and that is the maybe truest form of price. And candlestick become an indicator to visually package and represent price in a package time frame. Now, unless we have an agreement as a trader economy of these are the time frames that we trade, which is generally set to the daily, the weekly, the 4 hour, these are the common ones. And then if you have a close of a 1 hour candle, then you can also have the 45-minute candle, which would close that would coincide. But then it depends what time frame you look at. Are we then implying that the common beliefs of the common time frames is what gives this validity? Because sometimes I will look at the awkward time frames just to get a sentiment of what is the average going on. Just your reflections on this.
Well, you answered your own question. You said it depends on what time frames you look at. It depends on what time frames you look at. And that's all a function of your process. Right now, I enter every single trade on a closing basis. Okay. I stop out every single stock trade on a closing basis. Futures trades differently. But if I'm looking at stocks, it's always a close. And it's always a daily close. Unless I've entered on a weekly pattern, then it's a weekly close. So process dictates what matters to you and where the emotional candles are formed and which close matters to you. It's process. I assume everyone that's watching the show has a process they've developed. Hopefully they've rigorously tested it. What time frames did you test? That's where these things matter.
Because you had spent a lot of your career on the lower time frames and built the muscle of resilience to the psychology of the lower time frame. No one transitioning to a high time frame. Obviously it's slower, it's calmer, but it probably is a black box of new things, new emotions, and new thoughts to navigate. But what I want to start off with, a lot of people consider the lower time frame noise. Considering that you spend time and you probably found meaning in detail, and I would maybe guess that you don't give the lower time frame noise, but do you still use it to your advantage now, or is it?
I do. Okay, so I don't think it's noise. I don't think any charts are noise. Excuse me. But if I'm entering something on a daily chart, the pattern has been created on the daily chart. That indicates I need to enter a trade. I can fine tune an entry on a lower time frame chart. So that's what I'll use them for now. A lower time frame chart will not convince me to not enter the trade. It may convince me to not enter at that moment.
I see.
Okay, so that's what I use it for now. And that comes from my experience on the trading floor where every second mattered, every minute mattered. It's different now because my charts or my trades are entered. Well, first of all, this is an interesting thing to look at. Every single trade, in my view, every single action you can take needs to be dictated before you enter the trade. Because for me, the only time you're thinking clearly about a particular trade is before you're in it. Now, I'm 32 years now, 32, 33 years doing this. I still get stressed the fuck out. I do. When I'm in a trade. And this is why longer term trades work for me now. I can call 26 days longer term. I'm assuming that's longer term to a lot of your audience. And I mentioned that I can be in a trade 6 months. I like to walk away from the screens because I still am subject to that emotion of trade. So when I look at a longer term trade that's about this trigger, I've gotten a close and a trigger. Maybe I don't have proper reward to risk. So I dial it down to a lower time frame to find a better entry. And hopefully it happens. If it doesn't, it's just not my trade.
I like the separation of trade idea and thesis developed on a high time frame, and timing or execution is on the low time frame for precision's sake. If I'm to follow this mental exercise, let's say you've got a pattern you like on a high time frame to sense a sell opportunity, and then you have your high time frame stop, which is what I want to focus on here. You've got the invalidation, let's say, the previous time high time frame. And on the low time frame, you get a pattern you like to sense a rejection to then get into the sell. Now you've got an entry based on the close. Will the stop be now based on the low time frame or maintaining high time frame?
The entire trade's timed out on the same time frame, the way that I do it. Okay, so daily entry, daily close, daily stop, daily target, all of that. Excuse me. So, the only thing that changes for me is the entry. I can potentially fine tune an entry. So let's say that I've got a close. Let's go through a whole fake trade. Okay, I've got a close in crude oil telling me to go long. Okay, crude oil futures. Now, I don't have a reward to risk, but I know it's a high probability trade, and it's starting to trickle down like a lot of my trades do. I can then go to a 60-minute chart or 30-minute chart and see if I've gotten a drop that has turned back up in a reasonable way. So on every one of my charts, regardless of the time frame, I have an 8-period exponential moving average and a 21-period exponential moving average. I do not trade crosses. Well, when they do cross, they start to, if they're starting to trend, in whatever time frame you're looking at, naturally, just by math, they angle in that direction and they start to widen apart. There's one shorter and the other's longer. If on the 60-minute time frame, crude oil goes into that, let's call it a rotation zone. That is what we call it.
What is this?
Rotation zone is a angling and widening 8 and 21.
Okay.
So you can sort of visualize that. They cross, they turn in a direction, and they start to widen out and angle in the direction that the market is turned into. If on a 30-minute chart it starts to go in there and then starts to exit that rotation zone, I can possibly get a better entry on my daily trade. So my daily trade could be a double top or a double bottom, right? Or a wedge, or any other technical pattern you might look at. And then I go to 30 minutes and say, okay, I have a small 30-minute scalp to the upside. I'm going to use that to get in my longer term trade.
With that being said, because I thought the reason you do this is you didn't have a risk reward profile, hence you go down to low time frame, improve the entry to improve your risk reward profile. Why is then the invalidation to stop not upon this now rotation and the momentum you're seeing to then really move that asymmetrical risk reward?
So in theory, if I'm looking at the 30-minute chart, as my words were, I have a 30-minute scalp to the upside. We can do that trade too, but I'm trying to enter the longer term time frame trade. So my stop is logically going to be tighter on the 30-minute. My target is going to be closer. I can just do that trade if I want, but it also gets me into the longer, potentially more profitable trade in dollars, right? So that's why I do that.
I can sense the idea that, well, this is valid for a scalp, but I don't know if it's going to hold for the full move, implying that it could come back down in a couple of days' time, and therefore another buy opportunity. But how would you, on the principle on the first one, how would you manage risk? Assuming that could come lower, so maybe I should leave a budget of my risk, or do you now play with the break evens and then re-enter when it's
Are you talking about the short-term entry or the longer term?
So the short-term entry is connected to the long-term in this case. You're using it as an execution criteria. Are you now putting your full position size on the first go?
Yes, I'm now putting my full position size on and I should close the 30-minute chart.
I see.
That's it. I'm in my longer term trade now.
What is your philosophy on breaking even a trade once it's moving in your direction?
Excuse me, it was much more liberal when I was on the trading floor.
Oh, interesting.
Like on the trading floor, 75% of my trades were break even. Okay, they were then used to make long trends that you could ride.
Like, yeah,
So
but what?
scratch. I always have this is an old statement that I've made on TV interviews, everything I've said. There's 3 possible outcomes to a trade: a win, a loss, and a break even. 2 of them are good. A win and a break even. I've modified that to say every single trade is good whether you win, loss, or break even, because as long as you followed your process, you've done the right thing. If you backtest a strategy and you have data from it, and you say, okay, I win 52% of the time, and the profit factor is 1.5%, this is a viable strategy, and you skip a trade, you made a mistake, because now your data's thrown out. It's gone. It's worthless. Because you don't know which trade you've thrown out, and it adjusts that data that you've been looking at. Break-evens to me have always been part of that, but now I have stops that I always lower my risk as a trade starts to win, and sometimes it come down and stop me out break even. That goes into all of my data. So I mentioned 26-day hold time. I'm profitable on about 61.8% of my trades, and my profit factor is about 1.17 to 1.
Okay.
So some of those are break-even trades. Some of those are massive outsized losses. Some of those are massive outsized gains, usually in the stock market, where you have a gap up. That happened with us in Oracle. We gapped way higher than our target trade. So it's an outsized gain. Chewy, we had an outsized loss because earnings came out, gap lower. And over time, we found it for us to eat out.
For the last 2 years, a proud sponsor of the show is a top-ranked leading prop firm, Alpha Capital. And for the years that I've been working with them, and the thousands and thousands of viewers, you guys have been working with them through the discount codes of Titans of Tomorrow. It's clear for me to see why they are top-ranked prop firm in the industry. They have also reached a monumental milestone of $100 million in payouts. And with multiple step plans and multiple package types, they have going to be an option catered specifically for what you're looking for. So you can buy an evaluation account catered to your needs at the most competitive prices, and without discount code TOT for Titans of Tomorrow, you're able to get the most unbeatable, unmatched prices in the industry with a leading trusted prop firm. With that being said, let's get back to the episode. I want to explore this idea of the break-even trade and the high break-even rates that you had 75% in the past of your trades break-even. Now, I've had conversations with both sides of the spectrum where one would argue that a high break-even rate is a sign of a good system because you have now, when you enter a trade, you don't know the outcome. And when you're entering based on information, you might get lucky. For example, as you said, outside return that you wouldn't expect. So therefore, the more shots you take, the more opportunity you are, the self-save luck increases. And therefore, if you're protecting yourself as quickly as you can with break-evens, you've now increased that self-save luck. And then you have the other side of the spectrum, well, then you're whipped out. And you're missing opportunities that could have been your break-even now, left money on the table. So I don't know if there's a right or wrong. What is your view considering you had a high break-even rate?
So off the trading floor, the latter happened to me a lot. Yes. Which is why I had to accept that trades might go against me. On the trading floor, it was all the stimuli around me. So if I got no symbol at all, if I got no trigger at all from the sound around me or the activity around me, break-even was the most comfortable thing I could do. Because I did not look at charts. I did not look at fundamental data on the trading floor. I looked at the stimuli around me. Who was selling? I could look over there and there was Goldman Sachs. I could look over there and there was JP Morgan. I knew who covered Monroe Trout. Okay, I was one of them for a while. I covered his Bermuda hedge fund. So I knew who was doing things, and I knew whether those things would matter or not over time. So I would stay in a trade based on what was sitting around me. That was gone when I left the floor, and I didn't know where I was. So I had to completely reinvent myself, and that's how that happened. So now I care less about the break-evens. The break-evens are a function of a profitable trade that I'm trying to let run turning against me. Back then, it was fear.
The break-even trade, it can open up this idea of I got into the trade and I'm protected, so it can improve your psychology. But at the same time, it can, what I want to explore basically here is the fear of missing the trade worse, or getting in and then turning into break-even, therefore fear of missing the trade, or just hitting stop loss and fear of being wrong if you don't break even. Because I've spoken to traders that just don't believe in break-even, which is interesting because I like break-even very aggressively to protect myself and get in. So I want to hear your thoughts on the emotional side of should you break even or not.
I can understand the concept of traders saying you shouldn't break even, and they get that. For me, as I mentioned earlier, every single trade is planned out start to finish before I get in. And part of that is the possibility of a break-even. So it's accepted. If that's something that a particular process says, no, if I break even, that's not good, it screws with me. That's fine. I don't really have an opinion on it. For me, a break-even is fine. I try to get away from attaching my own personal worth to whether a trade wins or loses. And it drives me crazy when I see young traders do that. You're not smart because you won a trade. You're not dumb because you lost a trade. Because otherwise, you're smart, you're dumb, you're smart, you're dumb, you're smart. That's stupid. It's not a way to live.
Especially on some sides of one trade.
Absolutely, absolutely. And a lot of traders get into it because they want to go to the club or to a restaurant or to a dinner party. Say, I bought Apple today, I made $100 grand, nice day. You're an idiot. Like, this is a profession. This is a trade. They should have a trade school for trades. They do. You're involved with some of them, the good ones. From my perspective, your emotional well-being should not be tied to whether you won or lost. That's why I tell traders all the time. Your job is to put on the trades that you planned. That's it. Losing trades are a complementary probability to winning trades. No one's 100%. One doesn't exist without the other. It's a zero-sum game. So if you're getting into trading thinking I'm going to be really down when I lose, I'm going to be really up when I'm lost, I would say you're one of those people that break-even is going to bother you more than losses. And if that's who you are, fine, figure it out. But for me, I'm comfortable with it.
Stepping stone of this idea of the self-worth attached to the P&L, and that can be like a graph. It's all trajectories up, and that down portion eats you up. It's a common thing that basically all the traders I've spoken to have explored this idea that it's hard to detach. By extension, this idea of imposter syndrome. If I just spoke to a guy who's had a long career and he's made very good living for himself from the markets, and I was like, maybe it's 15 years career. He's like, do you still get imposter syndrome? He's like, man, all the time, all the time. Because it was this idea of like my new all-time high in my P&L now becomes my baseline. So a healthy retracement feels like a drawdown. Both of these ideas, P&L self-worth or just the psychology component of imposter syndrome, it seems like you've been able to remove yourself from it when many others who have traded for a long time and seen the dollars struggle to do so, let alone the struggling trader. How are you able to do so?
So part of it came from being on the trading floor. So I'm comfortable saying, because it's not my situation now, when I was on the trading floor, I kept $30,000 in my trading account. When I doubled it, I took it out. Okay, and I put it into managed money with investment advice. That was it. It's gone. It's not there anymore. When I drop below, I promised myself I would never put more money in. Now I broke that promise to myself plenty of times, but I said no, I'm going to make the money back. Setting the goal of making your losses back is it's poison. It's not something anybody should do.
Okay.
So the way that I escaped that was making myself real world break even. Okay, so you've heard of this already. Okay, so in Chicago, across the street from the Chicago Mercantile Exchange, there was a sandwich place called Mangino's. They made Italian hero subs, right? And I ate there a lot. Okay. I don't look Irish, right? So a lunch in Chicago at the time was about $11. So after I would go into a bad losing streak, I would stop myself and I'd say, okay, I need to make myself a real world break even. So this month I'm going to pause my Bourbon of the Month club. I'm going to cancel cable for a month. Okay. I'm going to stop going to Mangino's and I'm going to bring a can of tuna fish for lunch every day. Now this may seem to some people like a punishment, but it was helping me remove myself from the sting of a loss by saying I haven't really lost because I'm saving money elsewhere to make up for that in order to be able to pay my main bills like rent, like car payment, like the gas for my house. Right? That's how I did it.
One way to do it.
I remember taking a trade one time saying, okay, this trade is only about $8.99 potential loss. So all I have to do is bring lunch from home for 9 days if this trade loses. I'll be break even, not a big deal. And I lost, and I did. Subsequently, I lost weight, which I liked. So I was like, okay, this is working. I'm going to do it with the food thing mostly, but then as the trades got bigger, you couldn't really do that. So people need to understand that imposter syndrome is never going to leave you. It still doesn't leave you. But it's a lot easier to deal with when you have a longer term time horizon. Because I can be way down in a trade and I'm still far away from my stop and I don't have to worry about it. And I've got multiple trades on at once. And so those act as oftentimes as hedges, although I didn't put them on as hedges. Right? One thing might be signaling one trade, and then 3 other things might be signaling something in a different direction if you're looking at correlations. I have to put them all on. I have to. Otherwise I've broken my process.
You're mentioning here, I mean, the trader's belief is generally the other side of capital or the online valuation funds, you're using leverage and you're growing that account, and it's extract what you can deliver from and forever grow the account. Seems like the mission of traders to then scale your account size because the percentage gain becomes more fruitful. In this approach, you are limiting yourself to have that compounding effect. I see the psychological benefits. But why is this the approach in terms of just scaling and growth over the years?
So I compound in my investment accounts. Okay. That's where I compound. I generate revenue in my other accounts. So one of the ways that I think people should look at it is restaurants is a really good example. I use a lot of food analogies. I think I'm food addicted. A restaurant, somewhere in the range of, I may be wrong about this percentage, but 90% of restaurants in the US fail within 6 months. Yep. Okay, I don't know if that's right, but what a restaurateur tries to do is they try to stop taking money out of their pocket. That's when they know they may succeed. Okay, it's like, wow, my sales last week, I'm able to buy my supplies and pay my employees. Not paying myself yet, but I'm there. I get one more customer in, that money's mine. I get 2 more in, that money's mine, right? And they can look at it that way. In a weird way, traders should look at it the same. So then what a restaurateur does, as they start to make a lot of money for themselves, they open another restaurant. That's my investment accounts to me. So I'm running one restaurant that funds all my other restaurants, which serve a different kind of food, I guess.
And
so, yeah, exactly. So that's where I do it.
I like this. In fact, I've approached my 10th year next month in markets.
Nice, congratulations.
Thank you. And something that I did only this year was exactly this. I liquidated 90% of my account on the tariff drop, luckily, because for the first time I nailed it through no virtue of my own. But now the reflection 4 or 5 months later has been, because now that is, I think, maybe 25% up aggregated, it's brought me so much relief in markets in terms of not chasing. I'm able to travel into a tour and not be on my phone trying to figure out the markets. It's helped me a lot. And more importantly, this was typically debt capital. I'm never getting 3 trades at once. I'm not utilizing margin, so I'm putting money to work. This is something that came very late to me, and probably a thing I'm most only consider. Does diversification, in a sense, is a psychological play? At least you're making something along the side of maybe losing periods in markets when you're active trading.
So it's interesting for individual traders. I'll call that hedging, which you just said. Diversification to me is hedging. Right? That's what it is. One of the things I do in my active trading is have a small portion of my risk capital reserved for things that don't correlate with my strategy. I covered institutions for a long, long time, and one of the things that was funny to me was institutions would do these massive futures orders, right? And then I would call the guy I knew at the desk and say, "What are you guys doing?" He goes, "The futures don't matter. We did the other trade on the other side." And so everybody in the trading floor would be going crazy, saying Goldman Sachs is selling futures. Doesn't matter. They're buying cash on the other side. That's the trade they want to work, not the futures trade.
Okay, yes.
So I started learning, like, wow, all these things I've been doing, and still their massive futures hedge moved the market enough for somebody like me to take a tick or two, right? So I thought, Goldman selling, and I front run, it was great. But then it turned around, went the other way, and I was glad I was out. That's because the cash position was really where they were trading. So the diversification is really just hedging. If you diversify too much, you're eating away at your profits when it works, right? So I like diversification. I'm a multi-asset trader. Okay, I have a strategy that has different performance ratios in different assets, but it works in all assets. So I just allocate differently in terms of position size to those assets. But I do have a tiny little hedge portfolio where it offsets losses when everything goes against me to a certain degree.
I've heard a couple of traders do something similar where it's a side account for little projects like this, and a couple of them are kind of basic. Some of that ends up being a funny money gamble kind of YOLO account.
That's exactly what it is. That's exactly what it is.
Sometimes, but you can also now you can scratch that itch of wrong behavior in control environments as opposed to domain.
You cannot get rid of bad behavior. What I hate to see is when traders are getting rewarded for bad behavior. And this happens a lot now. A lot of traders, especially in sort of the social media sphere, they've been trading 8 years, 10 years, 12 years. They've never traded in a market that has not been driven by Fed policy and Fed manipulation. They've never traded in those markets. The first time that the Fed started buying assets was in 2003, 2004. I started trading in 1992. So when I first started my process, nobody cared what the Fed did. And then there was the Japanese currency crisis, their devaluation. Then there was the Russian default. Okay, then there was the LTCM, long-term capital management collapse. You may have not heard of any of those. Okay, these are the things that drove the central bank to become directly involved in the markets that we have today. Are these situations?
Okay.
When the stock market crashed in 1987, I wasn't there then. But when it crashed in 1987, the Fed sat and watched it.
Okay.
I believe that was a healthier market overall, but this is the market we have. So we respond to this. A lot of guys that are trading and influencing now never saw any of that stuff. So there's a body of experience that they may get in the future that they don't have now. That doesn't make me better than them. It might actually make me worse.
Experience is
Well, it might actually make me worse because I'm not as comfortable with the current market because I remember the older market, right? So I'm not saying that I'm better than them. I'm just saying the depth of experience is completely different.
Yes.
So I may actually, my longer term trades, my wider bands may not appeal to some of the people watching this, but it appeals to me because I don't go crazy. I don't drive myself crazy in my head.
You mentioned Fed-driven price, which I understand. What's Fed manipulation?
Sometimes I hesitate to call it manipulation, but I'm sure you've heard of the plunge protection team.
Yes.
I don't know if it does or not. A lot of people believe it does. A lot of people believe that it's been admitted. I don't know if it has.
Is the idea that on a large crash or a big sell-off that they'll intervene to
Yeah, so the structural idea of it was that the Fed created it after the great financial crisis when they pulled all these banks together and said, you will not allow this to happen again. And it was tested in the flash crash. That's the theory.
Okay.
Right? You will not allow this to happen again, or we will let you guys fail. So if that's true, that means the market can't fail and those banks can't fail. And I'm not really comfortable with that. As a capitalist, as a free market, I'm not comfortable with it. Yeah, purchase bad behavior. And one thing I've taught traders for years, when I did used to teach or when I was a risk manager, is I said, look, you should not get rewarded for bad behavior. But if you do, you should recognize it because you don't want to do that again. I was a risk manager, it's a risk manager role at a Chicago prop firm. Okay, there was one time where a guy he knocked on the door and he said, I want my risk margins increased. Why? Because I think the Fed is going to high grades. Okay, I want to be long the dollar, I want to high grades. I want to be longer than you guys allow me to be. And we discussed it. We said, okay, we'll up your rates a little bit for this trade. And the Fed did not hike rates, but his trade still made money because the markets took that as the Fed was behind the curve and they're going to hike more in the future. So the dollar went screaming higher after an initial drop. He was peacocking around the trading room like he was the smartest guy on the planet. So we called him in the office and we said, you're not getting paid on this trade. He flipped out. He's like, why? I made money. You know, I'm going to buy a car and do this. So you were wrong. You were wrong. You said you wanted your risk increased, your margins increased because the Fed was going to tighten. They did not tighten. You were wrong. You're not getting paid. And his head just drooped and said, we're paying you. Of course we're paying you. We're not assholes, right? But don't act like that because you were wrong. You were fortunate. You were lucky that the market reacted that way. So there's two things we're looking at. We're looking at markets. What happened and how did the market respond to it? How did the market take what happened? So to me, there's a hierarchy of questions. Why the market is moving is the weakest question a trader can ask.
Really?
Yeah,
The why.
The why. As a trader, your job is what and how. What happened and how do I react to it? And then afterwards, why is my hobby? Why is why I did CNBC and Fox News and Bloomberg and CNN and why I did all those appearances? That's the why.
Is better understanding the why not going to help you better do the what's and the how?
No, because you could be wrong about the why. I was at a German bank once, and one of my responsibilities was British pound US dollar. That was one of my responsibilities. And one day the pound was moving a little frantically against the US dollar. It was going crazy against the Japanese yen. Low volume day, low liquidity day. And I called up a friend of mine at Lloyd's of London a couple hours later, and I said, well, what was that? And all around the trading room, they were screaming, Soros is involved, the Bank of England is doing something, the Bank of Japan's going to cut rates, all these things were going on, all this screaming. And I called my buddy at Lloyd's of London and said, what was that? He goes, oh, there was a massive, really large Japanese sushi chain that is about to launch in the UK, and they were changing yen for sterling. Now, the moral of that is what economic conclusion can we come to from a sushi chain changing a lot of yen for pounds? We can't. So a lot of people were figuring out their why, but almost every single one of them, I would venture a guess, was wrong. So now the next time that happens, are you wrong again? So to me, the why should be a hobby for active traders. It shouldn't be Bible.
Yeah, I see your point because you can see a level where there's buying activity, but each moment is unique because everyone's buying for a different reason. There's different buys every time.
Absolutely.
So to now try and get a common denominator of what this common why is, it's probably impossible.
Yes, if you're wrong about the why, the how, the action that you take, you may react incorrectly. That's why I say you need to plan out the entire trade before you're in it, because that's the only time you're thinking clearly.
Yes. In the case of your colleague, where he was about the interest rate and he got it wrong, but he made money. Does this saying of it's better to do the right thing, what was it saying, bad behavior and good outcome is a worse thing than good behavior?
Yes, it's way worse. If you get rewarded for bad behavior, you'll empty your account. You'll be that trader who said, well, this worked last time. Yeah, it doesn't work. As a matter of fact, bad behavior, it's likely to not
This
work.
guy's obviously been watching your boy,
I
right?
his name because if anybody ever sees this. We called him the indicator because he was wrong so often that we believed that you could take the opposite side of every one of his trades and you would make money. One of the traders tried that. He ended up losing money because he was not able to figure the right time to get out. He only followed his entries, he didn't follow his exits. So he was not able to do it. Duration of trades matters a lot. Okay, I'm sure there's a lot of people watching this that trade much shorter time frames than me. We could take opposite positions at the exact same time and both be right. Because he could take, I'll take a long trade, he or she will take a short trade. I get in, goes against me like a lot of my trades do. They cover, then it goes my way. And I actually had that happen. I was on a split box screen. I think it was on Bloomberg with Jan Hatzius. I'm not sure where he is now. He was with Morgan Stanley at the time. And we talked different directions of sterling, right? And The next time we were on, they were talking about how he was right and I was wrong. And I said, no, I was right. You just didn't have me on when I did my profits, right? Let's just say, for example, he was sure he said you need to buy it. I said you need to sell it. Went my way, I covered. Went his way, they had us both out again. That's why TV is terrible. TV is terrible. We're in the right. This is the right medium for learning what you need to do. TV's awful. Turn it all off.
I want to explore this idea of risk more because it's another hot debate that happens. A lot of people deploy it in different ways. First of all, what is your philosophy on risk?
Start thinking in percentages rather than dollars or pounds or euros, whatever you trade it. Start thinking in percentages. And I believe that to be critical because when you start adding zeros to your risk account, the percentage stays the same. So it doesn't mess with you. Because larger losses mess with people. It might be a smaller tick loss or pip loss or whatever you're trading. And so if you're thinking in percentages, it's the same. So I think I have spreadsheets for every single thing that I trade, and it's a risk calculator for me. So I enter in the buy price, the stop price. I don't put the target price in there. And position size is calculated by that. So I find my entry and my stop before anything else. And then those two things go in the spreadsheet, and I have my risk capital and my percentage of capital per trade that I want to risk. Spreadsheet calculates out my position size.
Based on conviction or based on trade and better win rate trades, for example, will you modify risk?
No.
Why is that?
Because if I have one particular model that wins 68% of the time, and another one that wins 80% of the time, and another one that wins 52% of the time, I don't know when all three loss percentages are going to line up.
Sure.
So if I say, oh, it's my 80% model, so I'm going to risk more, okay? If I have, and by the way, I don't have an 80% model, but if I have an 80% model, that theoretically means in 100 trades I can lose 80 in a row. Or I'm sorry, I can lose 20 in a row, right? I don't know when that's going to happen, or if it's going to happen. So I'm just, for me, I'm more comfortable doing 3%, 3%, 3%, or 5%, 5%, 5%, and let the percentage model allows it to compound on its own. We talked about compounding a second ago. As I gain, it's the risk capital number goes up. The dollar amount increases, but the percentage stays the same. As I lose, the dollar amount I'm risking decreases, but the percentage stays the same. So it's brainless. I don't have to think about
You
it.
mentioned on the trading floor how you have the 30K and when you have a surplus you take out, so you're not benefiting from compounding thing. Now in your career is it's the growing version where you want to pull out at the same amount.
Yeah, I pull out at a much higher amount now in prop trading than I used to.
In general, do you
There's another caveat to that. So I'm going to make numbers up. Let's say I started with 50, and I said 100K, I'm going to leave it at 50. I'm not trading 50, trading 25. Because I want that compounding to create up to that $100,000. So I'll compound on that. I don't use margin like other people use it. I use it in my stock accounts more than my futures accounts. If my risk account is $50,000, I only have 25 in there. So that's how I use it. And then I can remove from that $50,000 maximum, put it in there as I need it. But in my mind, in my risk calculation, I'm trading 50, but only 25 is in my account.
I've spoken to a variety of guests on the show, and the unanimous common denominator between all of them is the emphasis they put on data and actually knowing the inner workings and the insights of your edge and your performance. That's why I'm proud to bring a partner of the show, TradeZeller, the number one journaling, backtesting, and all-in-one insight experience created by traders for traders. What TradeZeller really gives you is deep insight of value trading that would ordinarily not be visible, whether it's understanding your trade types and playbooks, or even insights powered by artificial intelligence through Zeller AI. Whether you trade forex, futures, cryptos, the stock market, it all seamlessly connects to TradeZeller, so there's no additional work. You've seen me reference it dozens of times, and all of the benefits I've had in my trading from the insight I found from my TradeZeller. So join myself and thousands of other viewers of the show. You'll get the best discount using the link in the description or code TOT for Titans of Tomorrow. The story you gave of an institution buying futures, that was not the main play. It was the other side. Yes, and I spoke to a trader about 10 days ago, and he was also a fund manager, and he argued that positioning in the market is more important than price in the market. What is your reflection on that based on what you just said?
Well, I think so at the end of the day, we all think the same things. Otherwise, we wouldn't be winning traders, right? Positioning in the market applies to
Regarding COT reports is what he was basically saying. Like,
I don't look at those at all. And one of my closest friends in the industry, Carly Garner, she lives in Las Vegas. She looks at it all the time. But I don't look at it because, again, that's sort of a why for me.
I see your point.
It could be kind of a where, which is above why. Where are people positioned? But it doesn't matter to me because I will take a trade. People say to me, do you trade on out of half day on Christmas Eve? Sure, I do. If I get a signal, I trade it. Sometimes I have an outsized win, sometimes an outsized loss. Commitment traders is an incredible resource for people who want to know what the big players are doing, what the speculators are doing. Generally, I'm not in trades long enough for that to matter for me, so I don't look at it.
So that's how I've learned how to use the COT, and that's why majority of traders want to use it in this way. This specific trader, he uses it in terms of what is overall sentiment. The argument being, which I thought it was actually made a lot of sense, where prices are highs, which is basically where you're looking to get involved. He said, if everybody's crowded towards long on the COT report, he said, who's going to keep price going higher if there's no one left theoretically? I thought that's a very interesting philosophy. So he then waits for something to break to have a mean reversion. So by default, he's a counter trader against the COT, the masses. That's a very unique mix. Yeah, what's your reflection on this?
So I think that's brilliant, to be honest. I do the same thing. I just don't use that as my tool to get into. I'm a breakout trader. I hate trader labels. People call me swing trader. I say I'm not. People call me day trader. I say I'm not. People say I'm a long-term position trader. I say I'm not. I get into a trade that triggers, and when I'm hitting my profit, I get out. I don't care the time frame. I don't care the model, the style. I don't care about any of that. What you just described, okay? I look for breakouts of trends to catch the next trend. That'll happen on the exact same scenario you just described. So, for example, that type of, and I went through this with Carly once, that type of positioning on the COT report will happen at a double top. Right? If you just think about what a double top is, and we have something called high probability doubles. We've researched a multitude of different doubles to find out how close the two highs need to be together in the case of a double top, how close the two lows need to be together in the case of a double bottom to make it high probability, where the proper entry is, what the measured move targets, which ones work the best, where the stop needs to be. We don't put our stops below the two lows on a double bottom like a lot of people do, because we found out that the 37.5% retracement level of that entire move, because this is not, I wish I could show you the chart.
We're talking Fibonacci of impulse, the double bottom is over here, the 37.
So we use Fibonacci tools recalculated to be GAN levels. So we reset them. GAN levels are very simple. They're 12.5% each level. So it's 0, 12.5%.
I see. Almost like standard deviations.
Exactly. So if we're measuring out a measured move target from the right hand low of a double bottom to the peak, okay, then you have your extensions and you have your retracements in GAN levels. 37.5. If it breaks that, it's breaking the whole thing with very high probability.
But only around a double bottom formation prior. I guess you don't care about the why, but the first question comes to me is like,
well, let's talk about the why of that. If you think of what a double bottom is, okay, it's easier with double tops for most people. So you mind if I shift that? Okay, so double top. You get the trend. You get the pullback. You get the FOMO. I missed out. I want to get into this trend. Take it in. You get more profit taking up here to make a second top. Then you get a break of that level, and everybody who got in, the longer term people, the FOMO people, the people who didn't sell at these two tops, are panic selling, and that's what triggers this reversal, right? Everybody believes the trend is over, and a lot of people see double tops, right? It's not a secret pattern, right? It's not some sort of secret sauce. So people see that, and it just dumps, right? That's why you have to. In order to have a double top, you can't just have two tops. You have to have a move that it's reversing, otherwise it won't work as well, right? Then you get a break.
Oh, I gotta rewind that, right? This guy's like your boy. I'm telling you, this guy's like your boy, right? Using the fibs. Okay.
If it breaks that, it's breaking the whole thing with very high probability.
But only around a double
bottom to the peak. 0, 12.5%.
Interesting point on the double bottom and double
So
top,
if we're
though.
measuring out a measured move target from the right hand low of a double bottom to the peak. Okay, then you have your extensions and you have your retracements in GAN levels. 37.5. If it breaks that, it's breaking the whole thing with very high probability.
But only around a double bottom formation prior. I guess you don't care about the why, but the first question comes to me is like,
well, let's talk about the why of that. If you think of what a double bottom is, okay, it's easier with double tops for most people. So you mind if I shift that? Okay, so double top. You get the trend. You get the pullback. You get the FOMO. I missed out. I want to get into this trend. Take it in. You get more profit taking up here to make a second top. Then you get a break of that level, and everybody who got in, the longer term people, the FOMO people, the people who didn't sell at these two tops, are panic selling, and that's what triggers this reversal, right? Everybody believes the trend is over, and a lot of people see double tops, right? It's not a secret pattern, right? It's not some sort of secret sauce. So people see that, and it just dumps, right? That's why you have to. In order to have a double top, you can't just have two tops. You have to have a move that it's reversing, otherwise it won't work as well, right?
You know, I like this idea because you're connecting it to buying at highs, which was your initial philosophy we discussed at the beginning. I'm kind of connecting this to ideas of consolidation. For a new trader, consolidation is noise, there's indecision, it's choppy, let's not get involved. And as I got older, I realized, oh, maybe that's the activity I need to understand.
Hold on, we need to get another note. Why is this on the wrong account? Bum. Notes. Where are our notes?
Because this is where indecision, the tug of war between buyers and sellers, and someone's open. And then I came across the theory where it's like accumulation, distribution, reaccumulation, distribution. Is this essentially what we're describing in this formation of the double top breaking? It's a temporary relief in price, indecision on a level, and then reaccumulates and the buyers win.
Yes. So a lot of like Wyckoff is, to my knowledge, derived off of Stoudemire from back in the day. Stoudemire was from Chicago. He was on the CBOT floor, and I spent time on both floors. And I never met him, but I met disciples of his, and I followed that for a while. But I wasn't able to act on it quick enough. You know, you actually had to either keep track with a little pad of paper, or you had to run to one of the trade stations or the Reuters screens to see where the distribution was, and it just didn't work for me.
Okay.
All of the distribution models, all of the technical patterns, all of the price action, they all follow the same trigger system no matter where. I can't front run double tops or double bottom patterns because I lose more than I win if I do that. I take the probabilities out. So I just follow the probabilities of it. At the end of the day, a trader years ago, really successful trader, his name's Robert Cohn, never wrote a book or anything, just a really good New York Bank trader, told me a long time ago. It's all mob rules. Okay, when the mob decides to sell, it's going down. When the mob decides to buy, it's going up. And you have to find whatever way is comfortable for you to predict when that's happening and catch whatever piece of it you could. We started this with the 25-75. Okay, I take a portion of a move. Yes, excuse me, microphone. I take a portion of a move. I don't take the whole move. That's what's comfortable for me. People have to trade what's comfortable for them. It's Wyckoff, if it's Stoudemire, if it's Gann, if it's Elliott Wave, if it's fundamentals. All of it. We all make money when the mob agrees with us. So we have to find those periods of time when the mob does. It's not, I hate when people say more buyers than sellers. That's dumb. There's no such thing. It's more active, aggressive buyers. Yeah, that's a better way to put it. It's more aggressive buyers than sellers. Okay, it's more aggressive sellers than buyers, right?
True, right? Talk about this all the time. Right? Agree or disagree? All about the market orders. True.
You indicate the traders, and I went through the whole journey. I studied them all, and one grievance that I had with all of them was an accumulation, something changes, now it's a reaccumulation, or something rests, it's actually distribution now. And same with any wave, like a new count, something changes, it's a new count now. I was like, this is an indicator, of course, lagging by default. All of them felt a bit lagging, where price based on the theory of time needs to go up, it went down again, new counts. I was like, oh, what happened prior then? So I actually ended up frustrated on all of these fronts. What was your response to that, I guess?
I guess that I went through, well, I definitely went through the same thing. My story is I lost almost 6 figures in less than 9 months.
Well,
that's when I realized, that's when I realized, okay, because I had this, the market is wrong attitude. So I stay in trades or add to them because the market was wrong and I was right. Yes, please. You have to lose your trader arrogance, and that comes with early wins. And it really comes with being rewarded for bad behavior. Again, I'd rather see somebody lose money on good behavior than make money on bad behavior. Because all you have to, in that situation, all you have to do is get over the hump of understanding that losses come with wins. There's no 100% profitable trader. I call bullshit if anybody says they're profitable 100% of the time. I'm suspect of people who have win rates in the 90s. Generally, they have a really poor profit factor, which is a very viable strategy if you're able to manage those massive losses that come with that. I digress. My journey went from learning that the market was always right into I have to figure out which one of these strategies that often gives you losers, that hopefully are smaller than the winners and hopefully less frequent, which one of these is comfortable for me. So there was one thing that I think I invented, but I didn't because it's basically a market profile from Stoudemire. It's distribution. I, in my mind, created a concept that we called space. Now I call it clear path. Okay. I would see this on the trading floor. If I'm looking at just a standard chart, doesn't matter where it is, and the price action is consolidating, and the previous price action has a bunch of down candles consecutively, traders remember those areas of price because they get stopped out, right? So, and I saw this on the trading floor. When the market starts to go back up into that area, traders go, I'm not touching it, I got stopped out here last time. And the volume dries up and the move happens more smoothly. Not necessarily straight, but much more smoothly. So I started only trading into space, into previous space. That was the first thing. Years ago, I gave a speech on space at the University of Illinois Chicago campus. And a guy came to that event, and he pulled me aside at a breakout session. He goes, so I looked at your stuff, I learned it, and I think I improved it. Like, wow, so that's only now 6 months. If I was an arrogant trader, I would have said, who the fuck are you doing here, right? I said, cool, tell me what you did. He's been my business partner ever since. Turns out that he traded a year longer than me. He had a master's in electrical engineering, which gave him a great depth of knowledge of math. And he had gone to Switzerland to help them start the options exchange. I think Michael Arnold. Mike Arnold, he's MG Arnold on Twitter, I think. Brilliant guy. Bland personality, but he's a brilliant guy. If I had that trader arrogance, I would never listen to him. And he's the one who convinced me that all of this is basically looking the same way. Your entry criterion is more important than anything. When did you figure out is the best place for you to enter, not somebody else? Right? I had a lot of years where I got into a trade and the guy goes, oh, you're in it? Yeah, well, it's a little bit lower now. I'm going to get into it too. And they did, and they made more money than me. But I had to learn not to care about that because the consistency is the key.
Yes. I'm connecting this now to the profit taking side because there's a whole host of ways that can be done. It can be based on technicals, it can be based on the reason you got in, and validity sentiment. There's a long list. With the average hold time being around a month, 26 days, what does that favor in terms of reasons to get out?
So we always have targets planned out before we get into a trade, and they're price targets.
Price targets meaning like round numbers, or you mean technically oriented?
Technically measured move targets. We might have a date target. For example, if it's a stock, we might get out before earnings. I look at it this way. We always have targets. Targets are not necessarily where I exit the trade. A target is where an action is required. That's what a target is for me. Okay, so the action may be to tighten up my stock. The action may be to exit a percentage of the trade. The action may be to exit the whole trade. If earnings are coming up, I'll exit the whole trade. That's stocks only, obviously. It may be a place to add to the trade. If the trend is completely broken out on longer term charts, I'm going to add to this. I'll still tighten the stop up, but I may add to it. My one rule is never increase risk, only reduce it. That's a rule that's unbreakable for me. Now you say, well, if you add to a trade, you just increase risk. No, because I tighten the stop at the same time.
Interesting.
The percentage risk has to stay the same for me. So that's how I look at exiting trades. Okay, it's different for each trade. It's not asset specific, it's trade specific. Does that make sense?
In this specific case where you have a winning trade, it's arrived to a price target which is probably a level of resistance of some form, and then you've seen strength and weakness, oh, this could actually be a buy opportunity because I guess the liquidity of the sellers on that level it becomes a buy opportunity, counterparts. Anyway, would you now trade your stop up to that level on your principal trade?
It's all planned for the trade. So it's never a time where I say, the trend is switched, I'll switch out of it. I have that part planned for the trade too. This sounds cumbersome. It's actually not. So for example, let's say I get into, I'm picking this, I don't care.
Let's do Tesla.
Okay, let's do Tesla. I'm going to get into Tesla at this particular price, right? This is on a daily chart. I'm also looking at a potential buy signal on a weekly. I look at this.
We gotta rewind that a
Targets are not
second.
necessarily where I exit the trade. A target is where an action is required. That's what a target is for me. Okay, so the action may be to tighten up my stop. The action may be to exit a percentage of the trade. The action may be to exit the whole trade. If earnings are coming up, I'll exit the whole trade. That's stocks only, obviously. It may be a place to add to the trade. If the trend is completely broken out on longer term charts, I'm going to say, I'm going to add to this. I'll still tighten the stop up, but I may add to it. My one rule is never increase risk, only reduce it. And that's a rule that's unbreakable for me. Now you say, well, if you got to do a trade, you just increase risk. No, because I tighten the stop at the same time. So the percentage risk has to stay the same for me. So that's how I look at exiting trades. Okay, it's different for each trade. It's not asset specific, it's trade specific. Does that make sense?
In this specific case where you have a winning trade, it's arrived to a price target which is probably a level of resistance of some form, and then you've seen strength and weakness, oh, this could actually be a buy opportunity because I guess the liquidity of the sellers on that level it becomes a buy opportunity, counterparts. Anyway, would you now trade your stop up to that level on your principal trade?
It's all planned before the trade. So it's never a time where I say, the trend is switched, I'll switch out of it. I have that part planned for the trade too. This sounds cumbersome, but it's actually not. So for example, let's say I get into, I'm picking this, I don't care.
Let's do Tesla.
Okay, let's do Tesla. I'm going to get into Tesla at this particular price, right? This is on a daily chart. I'm also looking at a potential buy signal on a weekly that could only possibly trigger on Friday because I only do closes, and a weekly close has to be a Friday. So I'm in this. Now, a Friday weekly close triggers. I planned out that if this is going my way, and the Friday long triggers, I'm going to add and I'm going to bump the stop up for the entire position. That's all planned out before the trade is on. So I'm never really looking at a trade and saying, okay, if this happens, I'm going to do it. This happens, I'm not. Never. I save my impulses for my personal life. That sounded weird. That's true. Yeah, I'll get an extra slice of pizza. That kind of thing. But in my trading life, there are no impulses. I do it, and if for some reason I think I really could have made more money, or I really could have lost less, that becomes a notebook thing where I research it now. I say, okay, what was the structure? What was I thinking? Why did I think I could do better? Okay, let's research that. And I'll send it to Mike to research because he's much better at that than me.
What you're describing here is kind of using oil price to determine areas of interest, and then you see what happens when it arrives there. I trade currency, so this is naturally a, I guess, on a time horizon consolidating market. I guess strong currencies. When you're looking at stocks, let's say, which are like the indexes or a lot of stocks are all-time highs. In this case, what do you do in terms of scaling out or leaving a runner in case it keeps going? What's your philosophy here?
I heard a great, I wish I remember who said it so I could credit him. It was definitely a male, and it was at some big institution. He said, the only new all-time high you shouldn't buy is the last one. Stocks are in a drawdown from a new all-time high about 75% of the time throughout history. And that may sound impossible, okay? But if you look at an S&P chart, let's do a Dow. Go back to 1921 in the Dow. What does that chart look like? Straight up. Okay. So you should never be afraid of all-time highs, ever.
Yep.
Okay, now I tend to buy breakdowns or breakouts, so all-time highs are a struggle for me. I'm watching NVIDIA, right? I got out of an NVIDIA trade, took what I thought was 75% of a move, and it's kept doing this without a pullback, and not in NVIDIA. Can't get in it. Now maybe in my investment portfolio somewhere, right? My advisor, my he might have bought it, I don't know. But looking at it from that particular point of view, those are the things that actually bother me more than a trade that got stopped out. Is a trade where I took profits and I see it go, and I have to train myself not to look at it. So I won't look at it. I'll keep it on my watch list, and I'll glance to see if I see a red number. Then if I see a red number, I can look at it and see if there's a pullback that I can buy, or see if there's a reversal I can maybe buy puts right on. That's the way I do it.
It might be a very niche question, but I'll ask it because it's relevant to me. I had of this entire time I bought a bunch of things, and one of them, let's say NVIDIA, and then it arrived to last week FOMC meeting. I thought, I've got everything's up and everything's amazing.
Right. This is on a daily chart. I'm also looking at okay, if this is going my way, that's all planned out before the trade is on. I do it. This happens. I'm not. In my trading life, there are no impulses. I do it, and if I really could have lost less, that becomes a notebook thing where I research it now. I say, okay, what was the structure?
Determine areas of interest, and then you see what happens when it arrives there. I trade currency, so this is an action of scaling out or leaving a runner in case it keeps going. What's your philosophy here?
I heard a great, I wish I could remember who said it so I could credit him. It was definitely a male, and it was at some big institution. He said, the only new all-time high you shouldn't buy is the last one.
What is that? How does that even mean?
All-time high you shouldn't buy is the last one. He said, the only new all-time high you shouldn't buy is the last one.
The only new all-time high you shouldn't buy is the last one.
Stocks are in a drawdown from a new all-time high about 75% of the time throughout history. Now that may sound impossible, okay? But if you look at an S&P chart, well, let's do a Dow. Go back to 1921 in the Dow. What does that chart look like? Straight up. Okay. So you should never be afraid of all-time highs, ever. Yep. Okay, now I tend to buy breakdowns or breakouts. It's an all-time high struggle for me. I'm watching NVIDIA, right? I got out of an NVIDIA trade, took what I thought was 75% of a move, and it's kept doing this without a pullback. I'm not in NVIDIA. Can't get in it. Now maybe in my investment portfolio somewhere, right? My advisor, my he might have bought it, I don't know. But looking at it from that particular point of view, those are the things.
No, I'm surprised this guy doesn't leave runners, right? Like, it seems pretty common sense solution to the issues describing. Like, leave partial running. Or like just trail it with like a trailing stop or the EMAs or something, right? Doesn't seem curious why he has that opinion, but
that actually bother me more than a trade that got stopped out is a trade where I took profits and I see it go, and I have to train myself not to look at it. So I won't look at it. I'll keep keep it on my watch list, and I'll glance to see if I see a red number. Then if I see a red number, I can look at it and see if there's a pullback that I can buy, or see if there's a reversal, like maybe buy puts right on. That's the way I do it.
It might be a very niche question, but I'll ask it because it's relevant to me. Of this entire time, I bought a bunch of things, and one of them, let's say, NVIDIA. And then it arrived to last week FOMC meeting. So I've got everything's up and everything's amazing, but this could be an opportunity for me to de-risk because I wasn't sure what was going to happen. So then I liquidated 25% of my positions across many, and then since then, week later, everything's kept running pretty much. So I de-risked for the right reason, but now I'm getting FOMO that I'm not in. Because I thought it would go down a bit, because I saw this thing that said, of the last 9 times that a rate cut has happened at all-time highs, a month later it's been down. Great, I can have a buy opportunity to load up, so I de-risked because my next buy. That didn't happen this time. In these kind of scenarios where you do the right thing, and it was for the right reason, but it's not playing out in your way, what do you do in this mix?
Well, all of those are whys that you just described. So why did you get out? Well, the last 9 times this happened, so is 100% positive going to happen again? We obviously know that's not true. That's a ridiculous statement to make. So I'm 70% technical, 30% fundamental. What does that mean? Fundamental comes before I look at the chart. Example from history. Chipotle, CMG, right? Had an E. coli scare a long time ago, right? I don't remember how long ago it was. You may or may not have been trading. I don't know. They had an E. coli scare in the States. I was still in Chicago at the time. I was driving down to the exchange. And I was listening to the story on Bloomberg Radio, and I drove by a Chipotle. I'm like, wow, the place is going to be empty later today, right? Line out the door lunchtime, out the door. Called my partner, and said, we need to buy Chipotle. Nothing's happening. And he calls me back later, he goes, can't buy it yet. Like, why? Because the chart looks like crap. Okay, when can we buy it? 2.5 years later is when we bought it. Because the chart looked terrible, right? I kept seeing the lines. They were longer and longer and longer. Chipotle kept going lower and lower and lower. This is part of our sort of 25 to 75 of 100% of the move, right? Chipotle needed to base and turn around and convince us that the sell-off was over before we bought it. Did we miss some? Yeah, I didn't buy low. If I would have bought it though, when I wanted to buy it, probably wouldn't be trading still. And I have a cliche, all of us want to be traders, want to be long-term traders, right? We want to do this for a living for the rest of our lives. The best way to become a long-term trader is to trade for a long time. Sounds stupid, right? It sounds ridiculous. Protecting your capital is always the most important thing. So what you did was a smart thing, okay? But you did it for a why rather than a what. What happened? Tariffs. What do tariffs mean for the market? I don't know. Do you? I still don't know. And the thing is, if I make an opinion about what tariffs are going to do to the market, I have absolutely no clue if my opinion's right or not. So I just don't do it. I have a stop in place. I'm fine.
I finally have a special offer to share with all of you from the US on my futures traders, which is over 20% of the listeners of the show, and that is Alpha Futures, a leading futures prop firm that is working with Trader 8 and NinjaTrader that are compliant with CME regulations. So the largest end-of-day balance drawdown in the industry, 90% profit split and same-day payouts, and with the most competitive pricing in the industry, with house starting at just $79. On top of that, just by being a viewer of the show, you get up to 40% off all evaluations. So want to get started with an evaluation right away, trading $50,000, $100,000, and you already know the power of prop firms and larger capital. So go ahead and use the link in the description or code TOT for the best prices in the industry, plus the best discounts in the industry. If you are a futures trader. The word that comes to mind when you say this is longevity. Longevity in the market. A lot of people can make a lot of money in a short amount of time, and then long-term burn themselves because they didn't consider longevity. What characteristics of trade behaviors would encourage us for longevity?
Take money out. Bernie Madoff happened because of greed. Bernie Madoff happened because he made 1% a month. It was fake, right? A little bit more than 1% a month. And everybody said, wow, if he's that good, I'm going to give him all my money. Well, that now puts all your risk in one place. And if that blows up, you're done. So that's why I tell people all the time to take money out. We have a newsletter, The Unfiltered Investor, right? That's our newsletter. We have a really good track record so far on the newsletter. Okay? It's been a bull market. A monkey has a good track record. Now that doesn't mean I don't want people to subscribe to the newsletter. I do. But I'm saying, as you make money, take it out. Because what if we stop in a bear market? Now I know we don't, but they don't know we don't. So when you make money, take some out. Don't continue to say, I made 100,000 last year, I'm going to make 100,000 again. You don't know if you're going to.
With the word longevity also comes the things you mentioned earlier, like market cycles, the Fed relationship to the market, XYZ, things change. Should there be strategies for different times of the year, or as the years go on, you should have different approaches? Or is it possible to have one strategy that can stand the test of time?
I don't know. I have a strategy that stood the test of time for about 26 years. It's had bad years, it's had negative years, it's had really, really good years. You probably have to ask me that in about 20 years. I was at a hedge fund for 6 years. I was one of the initial investors in that fund, and then I decided to join and handle what we call emerging managers, right? This is a fund of funds, okay? So we allocated money out to fund managers. Emerging managers with 3 years of track record or less. That's considered an emerging manager in the hedge fund world. I had somebody bring us a gold trader who had an unbelievable track record. Now I looked at his track record and it was a bull market the entire time that his hedge fund existed in gold. So I said, I have nothing to judge it. So I'm just gate away and threw away. As soon as I see a bull bear market, I want to see his things again. I want to see his data again. So it's difficult for me to answer that question. Seasonality is a real thing to your original question. So if your particular process does not respond to certain seasonal periods, yeah, it's smart to shut down. I don't make money on Fridays.
Long term?
Long term, don't know why. So my day ends on Friday at 11 o'clock. You might say that's convenient, but I don't even drink anymore. So it's not that convenient. I go to happy hours and get cheap food, but I barely drink anymore. So it's one of those things. I don't know what the market dynamic is on Friday. That would fall in why do I lose money on Fridays? Just don't trade out.
I came across this thing and it really resonated with me. It was this
I'm
idea
not the first person
that
I've heard you say that.
I put $1,000 risk and I lose $1,000. But when you have, let's say, a 1-to-4 risk reward trade, you could potentially lose $4,000 if it comes back to break even. Or if you don't break even, $5,000, meaning it could be more painful when you're in profits rather than just the initial entry scores.
Yeah, that's a great point.
So with this being said, I am very keen, and I always take a partial, and it's usually on a fixed level based on a R basis, risk reward basis. Other people I've seen will not do that. It's like, you've got to see analysis through and so forth. What is your view or conviction on
This is why I stress percentages. Because my target is, let's go with what I told you, right? It's 1.17 to 1.
Yes.
So if I'm risking 3%, I'm going to make about 3.3% on a trade in theory. Okay? I don't know if that math's right, but it's close enough. If I'm up 1.5%, okay, I know that I have more to go over time. But if I'm up $5,000 and there's a wristwatch I want, you see the money. When you see the percentages, it doesn't mean as much. It doesn't work that way. Because you can't look at the price of that wristwatch and say that's 3%. It's got a dollar amount attached to it. We live in a dollar world, right? And when dollars matter to you emotionally, percentages don't. Okay, so if I say you 15%, you're a trader, so you immediately go to trading. But in your childhood, you would have been like 15% of what doesn't matter to you. Dollars, 10,000, 5,000, the price of a watch, the price of a car, the price of a home. Those have an immediate visceral effect for you. Percentages allow you to take as much emotion as possible for you as an individual out. And I'm telling you, I got a lot of it, right? So this was a huge, I hate the phrase game changer. Can we come up with something else? It changed. It was an inflection point, right? It was an inflection point for me that allowed me to up my dollars without worrying more and celebrating more.
There you go. To wrap up the episode, Bobby, I want to just bridge the gap between 32 years of market experience versus 1 or 2. What would be a piece of advice you'd like to share?
I think listen to everybody, don't get in a bubble. The biggest thing I think is when you listen to, when you get into a bubble, you want to try to fit your personality to a trading style. That may not be the thing. One of the most successful traders that I ever mentored when I used to do that was a young woman out of Cornwall who was a physical therapist. Right? And when I shut my mentoring down, we lost touch. We still each other friends, but it's not my business to stay in touch with some young woman in England. So I reached out to her though because I do these things called trading against the pro, the CME group sometimes, where I'm the pro. And another one coming up, I think, in October. And I called her and said, you should join this. You were a pretty good trader. You should join this. See how you're doing. She said, oh, okay, let me get back to you. Came back to me a couple days later and she goes, I've made too much money. I don't need to do that anymore. What are you talking about? She goes, well, I kept my physical therapy job. I traded on percentages and I never looked at my account. She said, I had way more money than I thought I did, so no, I'm not going to do that. I thought that was one of the greatest days of my life. Not the greatest, my wedding was better, but I was so happy for her. And I was so happy to hear somebody actually adopted that theory of saying the money comes out in the end if you do the right things.
Then the last sentence, process, not outcome.
Yeah, exactly.
Well, thank you very much for your time. You had to separate time to be here, so I appreciate the efforts. Absolutely. Well,
Interesting interview. Seems like we're pretty well aligned though, yeah? So usually the case with this stuff? Obviously your boy did a good job of nerding out when you started learning about trading. I'll tell you that much. Motherfucker, I already knew all that shit, boy. Already knew it, already implemented it? Boy, what you fucking think? Goddamn, what should we watch next? I want to watch this next one with our boy Fabiantino. What's his name? It's not out yet though. Fuck. Let's watch his options.
From humble beginnings of a family who moved to the United States as refugees to now becoming a verified 8 figures in profit trader.
The way that I trade is, I ask myself the question, would I take this trade 90% of the time? And the answer is no, that I won't take the trade. Once I put the trade on, I have very high conviction, so I'll stay in the trade. If you stay in this mindset of being able to hold the positions to their full potential, that's how you catch the 500 to 1,000% gains.
Introducing the triumphant story of Brando, known as Elite Options. Starting trading 15 years ago with just $6,000, and in his story of making multiple 8 figures, we talk about the highs and the lows of large wins and large losses. And the key to Brando's success may surprise you because he breaks the #1 trading rule, and he doesn't use a stop loss. And with his years of experience, he takes a look back and shares what is most important for young and upcoming traders to focus on.
Let's say you have 5 grand. This is my last 5 grand. If I lose it, then I'm broke. The way that I see it is, even if you turn 5 to 25, you're still broke. Even 5 to 100, you still have a long way to go. So the way that I look at it is, the options can all go to zero by Friday. A lot of people will buy $1,000 worth of calls or puts, and they'll put a 30% stop loss. But I always tell people you have to account for your max risk first. Meaning, I will buy $300 worth of the option and allow it to go to zero. It's a controversial way of trading because people don't like to let things go to zero. But if your average loss is $500, why not just buy $500 worth of the trade? I lean a lot more into support and resistance. Anyone can find on the chart, but the hard part about it is waiting for it.
Why keep it super basic when most people would be, if I had this and this and this, I've so many things to show you how to be at a better position or better edge. But you kind of take back the basics.
Yeah.
What is the benefit of doing so?
That's a good question. So I'll give you kind of a real example right now. So,
ladies and gents, welcome back to another episode. Thank you for driving down here, my man. We are in Arizona, and I think we're going to take a nice deep dive, specifically because there's not many...
Let me get some food before this one. I gotta look at these charts, right? We'll look at 30-minute candles. I think particularly interesting. Swept this thing. My curiosity, was there any lick to get up here or not? We're not. Not really. Interesting. What's this stuff all doing? Just continuing to float up, okay. But I'll leave some music on, get some grub.
Profit jump like carnival ride. Trading night, them hate us cry. Stepping below charts on screen. Split roll fat, my mind stay clean. Price come test me zone, that mean. Whole squad up now in between. MetaMask loaded, wallet stay fat. Breakout coming, me double that. Island girl, watch me stack. She say Marcos, you too exact. Trading eye, me eyes and sky. Fibonacci levels and price gon' fly. Golden pocket, me not deny. Entries clean like suit and tie. Pull back sweet, we buy with side. Mass so crisp, me no need feel lie. Profit jump like carnival ride. Trading eye, them made us cry. Hey, babe. Hey, babe. Hey, babe. What them know about math and grind? Night chart flip to the sun gon' shine. Island soul but me code refine. Digit stack while them stay behind. What them know about math and grind? Night chart flip to the sun gon' shine. Island soul but me code refine. Digit stack while them stay behind. 39, no fear inside. Price rich levels, I'm feeling right. Shots move sweet, me hold it tight. Digital wins on island nights as Marcos.
Top down, charts up, Marcos. Trading in the Lambo, charts on the dash, watch it go. Money moves in turbo mode, speeding through these fibs, I know. Lights flash from the prophecy, minute cruise with the candle lit. Wheels spin like the entries do, making bands with the cleanest view. Marcos. Marcos.
Let us see time map then go. Cuban links when the fibs unfold. Auto 10 with the zone on glow. Woke up, tapped in, let the market roll. Left lane with the TP sets. Wind blowing like a spreads, I bet. Rear view full of missed regrets, but I'm chilling now. No stress, no sweat.
Nights so young, we chart and glide. Pinks and greens up on that drive. No back candle lit. We'll spin like the inches do, making bands with the cleanest view.
Marcos. 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 Roof built back and the charts align. Sunset sky and the map divine. TP hit, then the stars combine. That Lambo hum like a victory sign. Fast lane, no seatbelts on. Big trays, I'm in that tone. Summer flex, that VIP chrome. On Marcos trays, we set the tone. Marcos. 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 That 618 hitting nice. Marco's in the booth with the blueprint. You already know what time it is. Do the math, run it back. Price hit fizz, now I'm on attack. Let's take that shot, take no cap. That 702 hit clean, no lag. Clean, do the math, make it clap. Profit hit, now shorty's throwing back. Map that zone like a piece of art. Now we charting on the dance floor smart. Pulled up with the 5-0 levels glowing. Price touchdown, now the gains keep flowing. Top long gone, now I'm zoning golden. Dead op charts in the pack, we rolling. Late night plays where they all guessing. Now the slide with math and a little discretion. Auto TP hit clean, perfection. Marcos don't miss, just learn the lesson. Do the math, run it back. Price hit fibs, now I'm on attack. Take that shot, no cap. That 786 hit deep, I snap. Do the math, that blast. Daddies love it when the levels match. Chart lit up like a neon spark. Trading art with a club beat heart. No emotions, just that code. Perfect feel, yeah, that's how it goes. Don't chase green, I just align. It's all math, baby, every time. Do the math, run it back. Hit my zone and it fades to black. Never hope, just map that path. Fibonacci lines got me feeling that cash. Do the math, let it stack. She whispered fit while she arched her back. Map that trade, then danced it out. Now the club's in sync with the route, no doubt.
Yeah. Stay off the train. I'm off the math. Can't hear you from the tarmac. Goofy. Marcos. Marcos.
Woke up in the villa with the windows blue tint. My Carlo light trays hit while I rent. Say steak while the euro slid 5 pips. Didn't even check the chart, it's all instinct. She said, you good? I said barely. Off the map drifting, slow in the McLaren. AP looked like the chart I sketched, no cap. The face even showing resistance levels. You panic when the price go parabolic. I just lean back in this Paris loft melodic. She ride like a trend off CPI lies. I had your love in the penthouse sky.
Off the math. Off it. I ain't even here. Nah. Jet too loud. Gone. Wrist too clear. Draw down fake. Profit too real. They want the alpha, but they can't feel. Off the math. What? Lost in charts. I bought that zone, then I bought that car. Ferrari wide like a weekly gap, and the field hit hard like a market stop.
Charles paid lunch, didn't even log in. Bot took the scalp, now I'm jogging. Palm trees bend where I parked the rose. Price came back, then I split that soul. Lamborghini yellow like Euro strength. She curved like fib, I marked her length. Back test cold, but my heart on rest. Yacht hit waves, but the stats digest. Dubai high rise, wrist look fine. Chart like silk when she wind in time. Told her, baby, don't guess, just breathe. Price gon' come, just believe the speed.
Off the math, I ain't even here. Jet too loud, wrist too clear. Draw down fake, profit too real. They want the alpha, but they can't feel. Off the math, lost in charts. I bought that zone, then I bought that car. Ferrari wide like a weekly gap, and the field hit hard like a market slap. Off the weed, that's childish. Off the lean, that's broke. I'm off the math, and I'm still up. You chase that? Nah, I'm chillin'. Margot's never rush it. Let it come back. Watch this. There's always another one. Math gon' line me up. No need to chase that run. I let the chart show love. There's always another one. Price pull back, I slide. Y'all FOMO just for fun. I catch it when it's right. Let's ride. They buy green, I sip tea. I don't chase, I let it be.
Right.
Zone like poetry.
Okay. Let's get back to the nerdo, yeah? So just this view up out of curiosity. We put the flip the Valerian high and start going, or what, right? Or fucking what? What? Gold sending to okay.
Many traders who have crossed the levels that you have crossed. So I want to start off with just a broad overview. You've crossed the 4 figure, the 5 figure, the 6, the 7, and the 8. Within that journey, is it like a snowball? Like as you get to the large capital, it gets easier and easier, or does it get harder and harder because the big numbers probably eat up at you when you take a big loss?
Yeah, so I would say the absolute hardest is getting to the 6 figure mark because you're still trying to figure out what strategy works and how to manage your risk and your capital. So once you cross from 4 figures to 100,000, you have a blueprint of how to get to $1 million. And once you get to $1 million, that's when it begins to really snowball to where making 5 grand or 10 grand, you can do that in a couple hours or a day or 2 days. And for me, once you have the blueprint to $1 million, the $10 million comes very quickly. So the first 100 grand, anyone listening, you have to get there first to understand how the game actually works.
Going through that process, I gathered this with the answer of like you got the blueprint, so now just repeating the process, and you got 14 years behind you. So it is getting easier in that sense because it's a rinse and repeat. What about the formative years? The first 3, I think maybe the first one at your 30 mark. 30, so pretty early on compared to where most would be. What do you do in those first 3 years that others maybe don't?
Yeah. So the number one thing is the ability to just wait for the right trades, and the right trades don't come every day. Like a lot of traders, they try to make a monetary goal and they try to hit the same number every day, every week, and that's a common fallacy with trading because every day there's different levels of risk and reward, and you can't trade every day with a small account. So early on, I realized that my first year, and I would wait days, weeks, sometimes even a month or 2 at a time, and I would get very aggressive with certain trades, and went from 6 grand to 100 the first year, and then got to around 250 the second year, and then by the time you get to 250, the million is almost, to me, it was inevitable.
Super curious about all of this because, with benefit of hindsight, you probably say that was easy, but, looking back, even comparing to what most people go through, which is year 1, 2, 3 loan accounts, how did your even first year become profitable when others would be 3 year mark, 10 account loan?
Yeah, so I would say it's a combination of different things. Number one was luck and timing, just timing in the market. 2010 was pretty much the bottom of the 08 financial crisis in the United States, and I caught the wave of Facebook, Amazon, Apple, Microsoft, these stocks, and it was a combination of that and then just being able to catch the right option trades that can go 500 to 1,000%. Because during that time, you would see gap ups in these stocks day after day, and that allowed me to just jump on the right trades.
So it's interesting, 500 to 1,000%. Explore that with me.
Yeah. So options trading, the beauty behind it is you can go from 4 figures to 6 figures very quickly if you just wait for the right trades versus like trading futures or trading stock, actual like shares of a company. That's why you trade options is to go from small to big. And once you get to a certain threshold, do you necessarily need to trade options every day? Not anymore. You can pivot to also trading futures and shares. But for anyone listening to grow an account with little capital, you have to trade options.
Is that because of the risk reward factor that you can unlock?
Yeah, so there's no other vehicle where you can catch a 500 to 1,000% gain in a day or a week, right? Unless you catch a short squeeze on a small cap stock. So the probability of finding that is very, very slim.
So with the reward side, there's immense upside, but at the same time, there's a huge opportunity to blow your account very quickly because of the same reason. What protectionary measures do you have to go above and beyond maybe what a non-leveraged stock trader would or a future trader, these other arenas that are less risky in the sense?
Yeah, so trading options is extremely volatile. With the options, they can all go to zero by Friday if you get the wrong strike at the wrong time. So one thing I always tell people is you have to size for zero, meaning when you buy the option, that is your maximum risk. Versus a lot of people, they'll buy $1,000 worth of calls or puts, and they'll put a 30% stop loss. So $300 loss, they'll stop out of the trade. But I always tell people you have to account for your max risk first, meaning I will buy $300 worth of the option and allow it to go to zero.
Go to expiry basically.
Exactly, yeah.
So in that case, you're using no technical price action based stop loss or mental stop loss. It's just whether it's my profit or I let it run to zero. It's of this nature.
With weekly options, to me, it's more binary, meaning psychologically, you have to be ready for all outcomes. And by sizing for zero, you're at least taking the emotions out of the trade.
So, okay. What would another options trader be doing in this case? They'll be putting like a mental stop loss based on price action, and if it's 1 week expiry, the same day they might stop loss and get out when price had the chance to reverse over the rest of the week, which is what you opened up the night before. Is it like this?
Yes, yeah, most people they'll set a % stop loss or based on a certain level. But the thing with options is you could be down 50% on Monday, and you could by Tuesday could reverse back to even, and by Wednesday you could be up 20%. So by setting such a tight stop, you're not allowing yourself to see what the trade can actually do. So the sizing it's a controversial way of trading because people don't like to let things go to zero. But if your average loss is $500, why not just buy $500 worth of the trade?
Yeah, I see. But instead of putting your risk management based on the entry and stop loss, you just have it, I guess, a smaller position size and you allow the full thing to go. So it is controlled in the same way as risk management. At the same time, when people put a stop loss, which is kind of trading rule 101, put a stop loss. With that being said, when the stop loss is there as there's a few factors. Number one would be my trade is no longer valid, so it's an invalidation criteria. So if it's no longer likely to go my direction, I might as well get out. Another one is I got into the trade, it's chopping around, and I want the momentum, so I'm going to pull out early because it's not giving the reaction I expected. But there's always benefits to having a stop loss because it's there for a reason to validate the idea. I guess in your case, you're not having that same criteria of invalidations.
Yeah, so for me, the way that I trade is I will only take a trade if it's an A+ setup, meaning I ask myself the question, would I take this trade 90% of the time? And the answer is no, that I won't take the trade. So once I put the trade on, I have very high conviction. And for me, I have years of experience, so I'll stay in the trade. And most times it works out, sometimes it doesn't. Right? Like I don't win all the time. There's definitely drawdowns where you can be down 100,000 in a week or a month. But over a long period of time, if you stay in this mindset of being able to hold the positions to their full potential, that's how you catch the 500 to 1,000% gainers. And that's how you really grow the account. Versus you set a tight stop and you stop it all the time, you will never hold a winner more than the same amount, 40, 50%, 60%. So it trains your mind to be ready for everything. And I've grown an account from 4 figures to multiple 8 figures. So it takes this type of losing in order to get there.
Let's take a moment to talk about a partner of the show, a leading prop firm that is Funded Next. It's important for me to listen to our community to see who we're working with and how can we make your experience better. And the main feedback I heard is trusted payouts, quick payouts, ability to scale at affordable prices. And Funded Next has ticked all of those boxes. Not only being a top 3 prop firm in the industry, also having on-demand payouts, and every 10% you gain on your account, you will double your capital for free. And because in this industry, trust and reliability is the most important factor. An important guarantee that they have is that if you do not receive your payout within 24 hours, they will give you an additional $1,000 to your payout just for being late. So to unlock all of these benefits and work with a leading prop firm in the industry, Funded Next, check out the link in the description or use the code TOT. When you do your position size, you allow your size of zero. So you're accepting the total risk of the full position you put in. Is there a systematic way on how you connect it to your total balance, where whenever you size for zero is always an X% of your account?
I would say yes, not as much lately. Like nowadays, I'll allocate a certain amount to an account, and sometimes that account it won't go to zero, but early on, though, you should always have an amount where you should not trade anymore for the day or the week. Meaning, if you have, let's say, a $100,000 account, everyone has a number to where that's their pain threshold, right? There is no percent amount that everyone should stop at because we're all different. The way we look at money is different. So for you, it could be, you lose 10 grand, okay, I can't trade anymore. But for me, I could say, okay, 50,000 and I'm done. And you have to be honest with yourself. Because if I tell you your stock's gonna be 50%, you can't listen to my advice because the money means something different to each of us. So you have to look yourself in the mirror and ask yourself, what does the money mean to me? And there's a certain number where you start sweating and stick to that number.
What is your relationship like to risk and money? Would you say you're risky or pretty detached?
I would say I am very detached from money even before I had any. Like, I never was very, I never thought about money in the sense of the more I have, the happier I'll be, or once I have this, I'll feel like complete. So that
Why do you think that is?
I don't know, ever since I was a kid, I was always like that. Like, I would spend every dollar I had, and I would never worry about money. Even leading into 19, 20 years old, like, I always thought that way, and I think that helps with being able to scale an account. Because the more emotion you have attached, the harder it will be for you to actually grow. And that's another part where people need to be honest with themselves. Like, how much does money mean in your life to where if you lose X amount, it ruins your day or week? Like, recently there was one week I lost 500,000 in one trade. Oh, yeah, and people were hanging out with me and we're hanging out, and no one knew until I posted on Instagram a screenshot and me losing 500 grand.
Do you think that's a muscle you built over time of taking losses and seeing the big numbers and losing the big numbers that you desensitized, or is it something you just had? It's in your DNA maybe?
Yeah, I would say over time you get desensitized. Another part of it too is the way I see losing is you have to sometimes lose big to get to the next level. I mean, a $500,000 loss could set me up for $2 million win in the future. But to get to a $2 million win, like, it's not just this like exponential curve in your P&L. Like, you're gonna take L's along the way, and you have to accept that.
What is it about the loss that helps you break ceilings as opposed to like tilts and spiraling the wrong way?
Yeah, so losing, there's so much value to be learned. Meaning you're doing something clearly very wrong, and you have to extract the value out of that. Otherwise, you could blow up the account. Even at my level, like taking a $500,000 loss is not, it's not small even for me. So you have to look at it from that standpoint: is learn from it and then get better. Otherwise, the game could be over for you.
There's probably a fine line between harnessing this that you have, which is you're detached, and this is a tool you can use. You embrace risk, which is a tool you can use. But if you cross that line a bit too much, you can be very crass with it and over leveraging, overzealous, and then cross into the dangerous territory. How do you flow with that line? Or do you have cut-offs? Do you have like rules in place? This is my max loss after 2 losses in a day. I call it a day. Do you have any protection measures in place?
Yeah, I would say nowadays, if I'm down, I would say over 500,000 a day, then I have to stop because at that point you're just gonna start really revenge trading. And there's been days where I'm down over $1 million. Yeah, so yeah, I would say 500 grand and you gotta stop now.
I need to know what you made of what you're eating. And this is another level clearly. But what was the year 2, year 3 like when the numbers were not so crazy? More because I want to connect to the audience where they might think, well, yeah, he can do that. I get really angry when I lose simulated capital. It was a 50K account. It wasn't even my money. And it cost me $100 or $200. There's a heavy attachment to money for most. What does someone do to get to a healthy portion of detachment and embracing risk the right way?
Yeah. So I would say fundamentally you have to realize that there's much more important things in life. Meaning for me, I always tell myself, as long as I have my wife, I have my family, I have my friends, then I'm good. And the money comes and goes. You lose a job, you lose a career, you lose a business. You can always bounce back. You can get another job, you can get another career, you can build another business. And the same thing goes with money. Is everyone loses. You always, when you trade, you expect to lose. And if you have that mindset going in, you will win. You will win. You learn from the losers. You leverage the winners, and you keep scaling the account.
Completely true what you said. Like people's worst case scenario that sends them into tilt is like I spent $300 on an account, I blew it. You still get your job, so you just save up, you can go get, you have another chance. But what is it about loss? Because everybody knows like I can get another job if I lose, I can always bounce back. But is that I don't want to have that setback in life? Do you think it's related to friends and family pressure? Or is it just ego? Like I don't want to. If I made no money, I don't want to see the guy that fell off. What is it that people are truly scared of, even though they know that their life is going to end?
Yeah. Well, the thing with losing is it's very painful, right? And some people see it as they're ashamed to lose. So sitting down and looking at losing trades, it doesn't feel good right, at any point, whether you're a beginner or a seasoned veteran in the trading game. So doing that first, taking that first step towards actually looking at what went wrong, that's the hard part. But once you build that habit of looking at your losers every week, it becomes normal. Okay, losing's normal.
These guys are
normal,
fucking noobs, right? No composure. Getting shook off a loss? Shake my fucking head.
Super interesting, man. Do you now, because now you're in a situation where you have a lot to lose. Previously, I can bounce back and I can get a job and I can become at 10, 20 grand, but now when you're talking half a million, $1 million a week, this is just generational kind of money that you won't have the resets back to zero. Do you have things outside of your trading that are protection measures to make you more comfortable in the market, whether it's investments or other income streams? Is there other things that people can do to improve their trading in that sense?
Oh yeah, so I would say like anyone that's trying to either become a full-time trader or just make trading as one of their main sources of income, don't quit your job right away. It's very important to have something stable to where it at least pays your bills, whether your mortgage, student loans, credit card bills, or any type of liability. Because the more pressure you put on by just going all in, the less likely you are to perform. There's some people that can do it, but I would say for the majority, be stable first, and when you are actually trading, you don't feel any pressure to just take all these different trades. So I would say yeah, keep your day job until you feel like you're truly ready.
Brush our teeth.
I like to get people is if you have minimal amount of debt, I was less than let's say $100,000
blast
debt,
this
plus
thing again.
a house, credit card, other things. I have 250 grand in a brokerage account and then 250,000.
Baby, that's the art. Marcos. There's always another one. Math gon' line me up. No need to chase that run. I let the chart show love. There's always another one. You know, price pull back, I slide through. Y'all FOMO just for fun. So why I catch it when it's right.
Money, math.
Ooh, I said I was juicy. Marcos.
Juicy trade, yeah, I'm locked in. Chart said go, so I dropped in. Price hit sweet like a mango slice. Took that feel, now I'm feeling nice.
Money dance on the P&L. That green look good, can't even tell. Woke up rich, no luck, no spell. Just fibs and faith, I play it well. Tapped in clean with the entry math. Volume spike, yeah, I felt that path. Candle big like it hit the gas. Now the whole team poppin', champs in the bag. Sun still up, but the bags got fatter. Phone on mute, but my text got chatter. She hit target, yeah, with swagger. Juicy move, now we talking better.
Let it run, let it breathe. Price and rhythm, I believe. Not a chase, just a tease. Trade so ripe, got 'em weak in the knees. Let it run, let it breathe. Price and rhythm, I believe. Not a chase, just a tease. Trade so Juicy trade, yeah, I'm locked in. Chart said go, so I dropped in. Price hit sweet like a mango slice. Took that feel, now I'm feeling nice.
Money dance on the P&L. That green look good, can't even tell. Woke up rich, no luck, no spell, just fibs and faith, I play it well. Can I play, not pray? Nope. Juicy rich, sweet pain. Back tasted all day, so the wind hit clean like
Chart said bite, so I took that fruit. Now I'm outside in the golden coupe. Trade so fat, had to screenshot twice. That juicy entry changed my life. Am I?
Hey, told him watch the numbers. Marcos, man, talk different. Facts. We up. Let's go. That don't lie. That don't lie. Price gon' tell. I just said that fib and chill. 25 touch, that feel was real. 618, yeah, that's the kill. Man, don't flinch, I follow code. Wrist map tight, that profit low. Others hope I chart and hold. One trade, flip that wrist to go. Got that zone and let it breathe. While they chase, I plant that seed. Red to green, I see that lead. Man say, wait, now watch me eat. They got dreams, I got plans. They got vibes, I got scams. I don't blink when price expands. I just read it like it's scanned. Man, don't lie, price gon' tell. I just said that feel then chill. If I touch that feel was real. 618, yeah, that's the kill. Man, don't flinch, I follow code. Wrist map tight, that profit low. Others hope I chart and hold. One trade, flip that wrist to go. Price curve talking, I don't speak. Let that wit come kiss my cheek. Order stack like bricks, real neat. Math hit once, I'm off the seat. Wrote that range like holy text. Every level got respect. They still guess I just detect. Matt don't lie, just place and check. Blue lines glowing on the screen. Night still chart, moving me. Matt says sell, I press that key. Next day, yacht life by the sea. Matt don't lie, price gon' tell. I just said that fib then chill. 0.5 touch, that feel was real. 618, yeah, that's the kill. Matt don't flinch, I follow code. Wrist map tight, that profit low. Others hope I chart and hold. One trade, flip that wrist to go. Marcos.
Lines on glow, watch you pull back. Marcos got the fibs on track. Deep retrace, now we attack. Golden zone, no looking back. Fibonacci, feel that zone. 618, we in that zone. Slide. Touch the line, then I'm gone. Profit hit, I'm in my zone. 702, that bounce get wild. 75, now price on trial. 786, that entry vow. Caught the wick with math and style. 702, that bounce get wild. 75, now price on trial. 786, that entry vow. Caught the wick with math and style. Price to the fib, I don't flinch. Stacking at levels inch by inch. They chase green, I plant the seed. Move in silence, let it breathe. 0.5, warm up play. 618, the real buffet. Heavy at 7.5, we deep. Catching that wick while they still sleep. It's not hope, it's plotted out. Math be dancing, no doubt. Late night screen glow, got me lit. Candle kissing every fib. Fibonacci, feel that zone. 618, we in that zone. Touch the line, then I'm gone. Profit hit, I'm in my zone. 702, that bounce get wild. 7.5, now price on trial. 786, that entry vow. Caught the wick with math and style. 702, that bounce get wild. 7.5, now price on trial. 786, that entry vow. Caught the wick with math and style. No more guessing, just precision. No emotions, just the vision. They want hype, I want the rain. Chart react, I don't explain. Golden pocket glowing still. Price obeys the math, the will. Marcos drew it, price complied. Fibs on miss, we let it ride. Fibonacci, feel that zone. Fibonacci, feel that zone.
Yeah. Sometimes you win. Sometimes the market bites back.
SL slide. Got.
Marcos.
Got SL slides. Woke up cute, but the chart said bye. Caught that wick, no alibi. Shook me out while I sip my chai. Got math went left. Thought I was cooked, but I still look fresh. Bounce right back, no stress. Even when it hits, I flex. Got SL slash. Woke up cute, but the chart said bye. Caught that wig, no alibi. Shook me out while I sip my chai. Got math went left. Thought I was cooked, but I still look fresh. Bounce right back, no stress. Even when it hits, I flex. Set the zone, but the wig kept fangs. Snipe my stop, then took off dang. Drop my T, spit it on the max. For the group chat, yeah, I'm back. Chop me once, I ain't mad though. Math still sharp like a blade on gold. Double it up, we still move bold. When I lost, baby, we don't fold. Got SL slides. Woke up cute, but the chart said bye. Caught that wig, no alibi. Shook me out while I sip my chai. Got math went left. Thought I was cooked, but I still look fresh. Bounce right back, no stress. Even when it hits, I flex. It's all part of the dance. Fibs hit weird, take another chance. Miss the chart, never chase. Cause profit loves a patient face. Gotta be still knock. Lick my wounds while I moonwalk. Chart said no, but I said plot. Back in the lab, next fib get dropped. Got a mask still go. Took that L, now my wrist on froze. Club too loud for a chart regret. So I danced it off, no sweat.
Widowmaker got me, you were right. The entry point was super gambly. Yeah, didn't seem like the ideal setup. At least to me. What do I know though? Yeah, I saw the thing had quite a move down today though, right? Yeah, quite the aggressive move down. Almost took out these lows. Lost 600 because I'm stubborn, made it all back in Nvidia calls. Yeah, I'm actually watching an interview with some options trader right now. What's his name? Elite Options Trader, I think his name is. Yeah, Elite Options Trader. I got the worst of it, exited before the bounce up. I'm full port Nvidia calls. Seems a little risky. Interesting. Sold a bunch of credit spreads for good profit. I'm not familiar, I've never done that. Well, I am familiar, but I've never done it. Seemed interesting though. Interesting. I'm just sitting in the same trades. I haven't done anything. I'm bored. I'm bored. Oh, these things are looking pretty interesting. Where is it? Like Caterpillar. Potentially breaking out on the daily. Potentially. Bum, bum, bum. A bit late on the Reddit one. Where's Reddit? Or is this not sorted? Am I just brain dead? Same kind of story though. And just riding the moving averages. But a little bit late to this one though, so I already popped it in. A lot of these like clothing retailers had pretty big pops today. Like this did, so did Gap. Same with Macy's. When you buy a call, then the price moves up, and you sell the next strike up call for a profit, and you're left with the spread. What's into the spread? You make the difference. Think about Dell. I was looking at Dell the other day actually. It's about to sweep some pretty high time frame lows after nuking, right? Yeah. I have my alarms here. I'm like watching it right now. Kind of just waiting to see what's really going on here in the lower time frames. Might buy some though, honestly, right? Quite a ways down already now at this point. Like sweeping this level, like a weekly SFP basically, potentially. Yeah, usually I don't want to dabble too much like on earnings days. You don't know how the market's gonna react. But now that this is over, we'll kind of see tomorrow what's going on. 18.7 PE is pretty good in that sector. I don't really look at that stuff too much. I don't think there's a lot of edge to be derived from that, right? It's like everyone has the same information, thinking the same thing. I'll just kind of go based on the math, the chart, and like the momentum. Because I don't want to catch a falling knife here, but I might just buy some as like a spot hold, and if it goes lower, just kind of build a bigger position. Probably what I'm going to be doing. It's tricky though, because FOMC is coming up pretty soon, right? Definitely tells the actual value of the stock. I don't know if I go that far. I don't know if I go that far. You know, when I quit my job, people there, you know, would be trading, right, buying stocks, investing, and they were sitting here talking about how Nvidia PE is too high, blah blah blah, right? This, that. Yee, later. Later. As is the case with most tech stocks, and continues to be the case. Does it encompass growth? Yeah, but like, I mean, you always have to factor that in, right? Like, you can't just ignore the growth aspect regardless. You need to factor into the PE ratio. Like to me, trading is like sentiment, positioning, you know, like the momentum and the order flow. I don't think there's much edge to derive, especially like shorter term trading. Like longer term, yeah, you can look at that a bit more. Especially because like quant funds are taking over, right? The quant funds are taking over like the fundamental investors. Like fundamental investing is what gets people wrecked nowadays. Because people will look at fundamentals on a company and they all come to the same consensus, right? Like, oh, this company is like overvalued fundamentally. And then what do like quant and momentum funds do? They just fucking run you over if you try to short it. So you can sit there blabbing blah 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 all you want about fundamental this, fundamental that, and they just fucking roll you over and you hold the L. And not only that, but like what edge are you deriving here that other people don't have? Looking at fundamental stuff. Like, do you think you know more than like the 20,000 buildings of Goldman Sachs have as a professional analysts? And do you think Goldman Sachs is an advantage over like JP Morgan or like Morgan Stanley, etc., right? Like they're all looking at the same data, coming to the same conclusions. At least that's the way I look at it. Maybe that's like wrong. Other than the day, I'm not a financial analyst. I don't work in finance. So like I'm some random guy on the internet. I think like long term, this kind of stuff is definitely more applicable. But like, I'm talking like really long term. In a bull market, yeah, tech stocks sometimes have a higher PE because they have high growth. Yeah, but like, okay, since I started trading, when was it? I started learning about finance like in this period. I started trading like here. And even back then, all people were talking about was like the PE earnings of like tech stocks, regardless of like obviously they have higher growth than the typical stuff, was like overvalued. And I heard the same thing here, heard the same thing here, heard the same thing here. I'm still hearing the same thing today, right? In a straight bull market, doesn't matter as much for like the edge tipping, so I like to side on fundamentals currently. Yeah, it has been looking a bit shaky, but at the end of the day, like, are we rolling over, or are we just consolidating for another leg up? Like Google released Gemini 3 and now the stock's just going to the fucking moon again, right? Just another parabolic run up. Yeah, things are looking a bit suspicious, we'll say that. Definitely agree with that, right? And also like a lot of interesting potential cracks showing up in the private credit markets. Vantage has nothing to do with it. Find the stock with 1 PE. Just if things crash, low PE gets compressed less. Sell before end of the year and start shorting. I wouldn't go that far, right? I wouldn't go that far. It's like, I mean, it's hard to say because here's the thing, right? I've not been trading like. There are people that have been trading since like 1990 or like longer than that, right? So they've like experienced like multiple crashes, like the dot-com bubble, like the financial crash, like the 1987 stuff in like the out in the East, so on and so forth. So like I don't have like the memory in my own mind of like what sentiment was like at the time, blah blah blah. But from the people that I study and watch and that do have that experience, it seems like most of them are under the same consensus that like bear markets don't start with everybody talking that we're going to be entering a bear market. It's usually not that simple. We're gonna have a blow off top in December. That's what they're setting up for. I mean, maybe. You don't know that though. It's like, what's the equal weighted S&P? Is this the right thing? Equal weighted. Looking like it's flipping this level, right? My breath has been like increasing more lately. This whole dip was the oh no AI bubble. Then they were wrong. AI is not gonna pop Santa rally and sell off. I mean, it's possible, but you're describing one, like, it's like Doctor Strange and like the Avengers, right? Where he's looking at like 9 million worlds and you're just describing one of these like 9 million possibilities. What if Meta comes out next week and announces that they've like solved AGI? You think markets are gonna nuke, or you think tech is just gonna rip higher endlessly? And that's just like one of many different possibilities, right? What if the president of China has a heart attack, dies, and then they change their investing laws, and you see a lot more money flow out of China into international markets, and it sends S&P and Nasdaq and whatnot just flying higher? Another possibility. You have to watch the financial media to understand inflation. That's the opposite of what I do. Go fuck what those people say. There's a reason that they're on the news and don't trade, because they don't know what the fuck they're doing. And if anything, they're like paid to like push narratives. How about what they say? It's what it's between the lines. Yeah, but you can research that yourself, right? You don't need to like go watch fucking Bloomberg for that. Like at the highs, like these like financial analysts are like increasing the ratings of like stocks and pushing max copium for like exit liquidity. And at the lows, they're like max bearish, right? Like dropping ratings, recessions coming, blah blah blah, making people do the exact opposite: buy the highs and sell the lows. The really complete opposite what you should be doing. The thing about that is I can't tell. Like, are they in on it, or are they just like literally fucking stupid, and that's just their job and they don't know what's better, right? It's like the way I look at it. Like, if you take in any profession, like let's say you do like hedge fund managers, right? And you rank the #1 fund manager, and then like #2 and #3, and you go like all the way to like N, which is like the last one. And then you like create like stats around this. Like the top 5% is the top 5%, right? And everyone else is just shit compared to that. And that's like applies to any job on earth. So I doubt the people that are well versed in finance are just gonna be working as a news anchor. Kind of just as likely to fall into like emotional biases and other biases like the typical or average person. They're in on the narrative, changes on the dime. They're just talking heads. Yeah. But at the end of the day, like the other thing about it is like, people like that need to exist, right? Like the market that consists of differing opinions, people taking both sides of the trade. If not, the market, it could just be like going up only. If literally everyone was thinking the same thing, just max bullish buying, then be up only nonstop, or down only for everyone just max bearish. So you kind of need conflicting opinions. So that's why I don't look at the news though, right? Because for any single story that you can look at, any asset, one person can have like a bullish view of it, another one can have a bearish view of it. And also like in terms of price action, someone can have like a bullish reason why it's going down, and someone can have a bearish reason why it's going down, and the same thing for price going upwards. And you should make whatever narrative you want. It's good to know what your enemy is planning. I guess. I mean, I'd rather just use the math, right? And the charts are like reaching mean reversion territory, starting to lose like key moving averages or key levels, changing structure, then there's your answer. Don't need to look at the news for that. Like when the positioning starts to change, right? There's like a lot of people were in shorts. You know, prices like squeeze them all out. Positioning's changing. More information is better than less. Yeah. But the thing is you can't. Like you sitting here and saying that that's definitively what's gonna happen is like not how you should be approaching trading, right? Yeah, okay. If you think that we're gonna be getting a pump into December and then we see the sell-off in December start happening, then okay, like you plan for that scenario, great. But you need to be planned for every other scenario where this isn't happening. Like that's why at the end of every stream, I'm sitting here talking about multiple like, how am I gonna take a long from above, a long from below? How am I gonna take a short from above, short from below? Like, what do I want to see? What do I want the data to be looking like? Blah blah blah. And then whichever happens, happens. To me, like it doesn't matter what I think. It's just, I'm prepared for all situations. You know how many crashes have happened when everything's looking bullish as fuck? I mean, makes sense, right? Like that's typically how it works. Because when everyone's bullish, who's left to buy? Nobody. It's time to go down. Time to start dumping. Cash is good for all scenarios. Yeah, typically having cash is like it's always a good idea, right? Never know when a black swan is coming. Or like even something more serious than that, like a black swan can be like the COVID dump and recovers right after. But there could be some like, serious black swan that takes like years to recover from. So if you just had all your money sitting in stocks and they just all nuke out of nowhere, you're gonna be down a lot of money for a long time potentially. So it's always good to be diversified in some capacity. Look at the Japan crash, for example, right? Like that thing crashed. It took 20 years to recover almost. Being balls deep in overextended tech stocks isn't. Yeah, like I wouldn't be buying Google right now. Like maybe on the breakout I would have, but now it's like you missed it. It's whatever, right? Too bad. Look at other stuff. Look at like Dell, AMD, Amazon, Apple, so on and so forth. A lot of the memory chip stocks are selling off pretty hard, right? This thing is down how much? 40%. Well, there's always something to be buying, we'll say that. Our 20 shares a day they release the Berkshire news. Sold the next day, why? I think that was this day, right? It didn't like sell off the next day or something. Maybe it was this one. Quick prop didn't expect 330s. I mean, I don't think it's because of that specifically. Like the whole TPU thing's like a pretty big deal, right? The fact that they had like trained Gemini on their own TPUs. And like if you look at like the Nvidia chart, like the Nvidia versus Google chart, it's a pretty interesting chart right now. Seems like there's like some serious rotation happening here. Things been down only for a while. It's starting to like base out. Google might become the biggest company, right? Might pass Nvidia. Either way, quite likely they all go up quite a bit. I don't think this. But the thing about this AI train is that people can say it's a bubble and blah 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 whatever. But on the day, it's like a national security threat in the U.S., right? So like, there's no getting off the gas when it comes to this, whether you like it or not. Whether you think it's leading to a bubble or not. Because you can't just let like another China win the AI race. So whatever investments are needed, whether they're justified or not, it's irrelevant. But he's about to rip back 200. Yeah, like a decent bounce rate, isn't it? Yeah. That's just the narrative for the sell-off. They always make an excuse. I don't know if I go that far. Like, you do have to approach every situation like it's not, you know, history doesn't repeat, but it rhymes. So, like, yes, sure, there are some similarities, but you do need to have like the contextual information of the time. Either way, I'm not saying to sit here and just like ape into all-time highs, right? Like buy things like on pullbacks or whatever. And also like manage your risk, right? Like have trailing stops or have some system to take profit, starts to come back down. Don't just hold it into like a bear market. I'm just saying I wouldn't be betting on this train ending like on Christmas. Like Tesla is about to start scaling. It's like autonomous driving and like across the entire country. It just started scaling into Europe. While like looking like it's gonna break on like the higher time frames potentially, right? They sell the top by the bottom. Own a larger share of the company. Yeah, I mean that's like just trading 101, right? Just a big wave. It's like accumulate, distribute, accumulate, distribute. I'll be in cash, I'll wash. That's just all for end of year taxes. Yeah, like tax loss harvesting and whatnot. Pretty common. It is a good idea to do tax loss harvesting when you can. I mean, I wouldn't be all cash though. I guess it depends. Depends on what we're talking about, right? And then there's like multiple different sectors to be looking at. If I miss the gains in January, oh well. Yeah, I mean, each to their own, right? Everybody has their own strategy. Normally, if I'm in a situation like that, I'll just like DCA over time slowly. And then if we do get a dump, then I start to like buy in way more than I was planning on from the DCA. That's what I'm doing right now. Like I have like cash as well, but I'm not all cash. But I have been buying some stuff on this pullback. I'm just telling you. So when we're a year in January and SPY's under 600, you know that's what I thought. Yeah, but that's not what trading is, right? It's like no one cares about being. Do you want to be right or do you want to make money? That's the thing. Like, have a plan for every scenario and then execute accordingly if a scenario happens. Cause like, what if we don't go? What if that doesn't happen? Then you're just sitting there, cash, missing everything. So you're going all or nothing on one specific plan out of like 20 million different possibilities. No one's right all the time, so like, if that's your goal, it's destined to fail. Being prepared. It's bumping, I'll buy futures, right back into the cash in the day. Yeah, I mean, yeah, as long as you have a plan for when it doesn't happen, then yeah, right, that is the ideal situation. But there's no guarantees, right? There's no guarantees in this game. No free lunches, as they say. It's a lot harder to sell off stocks. I don't know about that. What's hard about selling off stocks? I mean, if you didn't have a plan on how you're gonna sell going into it, then yeah, maybe. If you're just like winging it, don't know what you're doing. But usually people have targets in mind, right? Like whether it's like a fixed target or like some data point they're looking at, or they just let it go with like a trailing stop, moving averages, so on and so forth. You haven't experienced a serious gap down. Yeah, I don't have to worry about gap downs. So I trade perpetual futures. And everything else is like long-term holds. So unless there's like some like massive change of structure on the weekly chart, I don't really care. You'll see. I think I'll be fine, right? I think I'll be fine. I've already taken profit into this rally as we've been pumping, right? So like even if there is some gap down, some major gap down, it's on my full position. I also have no problem holding these things long term. Like I don't care. If we enter a bear market right now, I could not care less. I'll just buy more during the bear market, and whatever I have that I didn't take profit on or wasn't planning to take profit on, I'm just holding it for another cycle. At least in terms of the quality things. I don't really dabble in particularly risky long-term holds. Oh goddamn. Remember what I'm telling you might come in handy. Yeah, I mean, it might. I'm not like discrediting it. Just I manage my risk, right? That is their only job to manage risk. If you're not doing that, then like, what are you doing? Go look at the Citigroup stock. And it's 2008 price. Citi. I'm gotta go way back for that. I mean, yeah, but like, who was holding this from year to year, right? What brain dead animal is holding that? This is a weekly chart. You have to sit in this thing for how many weeks is this? 800 days to get to the year, right? Most people are getting out when this level is lost. Especially when you see this, right? It loses the level, consolidates, and breaks even lower. I'm out of there, right? You guys can hold the bag. I'm out that bitch. If that happened in one day, that would be fucked, right? That's like, okay, you just got screwed. Feels bad. Like the crypto crash, for example, right? Like what coins went to zero? I think it was like Atom or something. Like the people that got like liquidated on this stuff because their stop loss orders didn't get triggered on this like massive flash crash. That's like, yeah, wow, that, you know, damn. Lots of false turnarounds. Doesn't matter though. Doesn't matter. Like that Citigroup thing. There in no world would I have stayed in that thing once it lost that level. Because like think about it, like like let's say it's a fake, right? And it does like a undercut and then rallies back. Then you can just buy back in. You have the option to buy back in. Right? Like let's say it did this and then it broke lower, and then it ended up doing like some like head and shoulders and came back and reclaimed the range and started going again. Then you can buy back. I'm not gonna just sit in it for the sake of waiting to see what's happening. A lot of those moves were pre-market. You can't sell and they stop trading. I don't agree. You had plenty of time to get out of this thing, right? Plenty of time. Yeah, you had this whole week to get out. And worst case, you would have got out on this red candle. Plus, you also could have like hedged the position, right? You also have the option to hedge these things. Like, how was the daily looking back then? Yeah. Options market being so easily accessible. There's a lot of the reason we had such a long extreme bull run. Yeah, I mean, it seems like in 2008 when they really started leveraging money printing, right? Kind of been up only ever since, and if there's ever any kind of issue, just print some more money. Not a viable long-term strategy, but that's what they're doing for now, so just gotta roll with the flow. But to feel the result of that band-aid. I mean, yeah, possibly, right? Definitely not like a sustainable long-term plan. Like, obviously they want to grow their way out of it, but like, not a lot easier said than done. Also, like, we're on the clock, right? Because like the interest is getting like exponentially growing on the debt. Not only that, but people are onto it, right? The world is not the same as it was 20 years ago. people don't need to depend on the US nearly as much, diversifying away from US treasuries and so on. But between like stable coins, it seems like the US dollar is kind of taking over the stable coin game, which is pretty important in terms of maintaining US dollar dominance. And if AI does blow up, right, which it will at some point, the AI is like a, it's not a matter of if it will do it, just when it will do it. Will bring quite the age of abundance to Earth. Crypto has also solved that part of the problem. Place to sink money. Maybe. Like yeah, like Bitcoin's supposed to be a store of value, blah blah blah, but I don't think it's like quite there yet. It trades highly correlated with the Nasdaq and whatnot, like risk on assets. It's pretty hard to make the case for being like a risk off. At least in my opinion. Also, that's what the data suggests. US stablecoins have to be backward securities to the debt market. Yeah, like Tether is like one of the biggest treasury bond holders, and now they're also becoming one of the biggest gold holders. Interestingly enough, actually. So they got their fingers in everything. But it's like well needed, right? Like if you look into the math of like payment processors and whatnot, I forgot what the figure was. Like every year, it's like 5 or 6 or like I don't know what the number is, but like we're talking trillions of dollars on a yearly basis are just eaten away by transaction fees, whether it's like Stripe or the bank or your credit card, blah blah blah, and it's chaining, right? Cause like one person takes 0.1, and the other person takes another 0.1, another one takes like 0.2. Like by the time your transaction reaches one end to the other, it's done like 10 different fees that's been paid. Whereas like stablecoin just rips all that out of the fucking water and tells them to go fuck themselves. So well needed innovation in that regard. Not necessarily store of value, just a place the money to go. If you have more money than products and services, inflation ramps up. Yeah, fair. But like I think when like true fear hits the market, I don't think people are keeping it in crypto. Even Bitcoin. And they're running for the fucking hills. Fine with me though, right? Fine with me. At the end of the day, I just want some volatility. Give me that volatility. I'm curious for the next Fed meeting. What's the probability at right now? To 85% now. Quite the change, right, from a few weeks ago? Like literally it was like 30% last week. Now we're up to almost 90. But the real interesting thing is that we're like not going to be getting a cut the next 2 meetings more than anything. At least that's what's pricing right now. Well, you're gonna get more money than you ever would want. What, in volatility? What's going on here? What's the reason we didn't get CPI? Yeah, I mean, lots of different theories, right? I mean, first and foremost, like the data being collected for that, I don't think they were doing it during the shutdown. Also, I think like the first one that they released, like there's some, from my understanding, like they needed that one for social security reasons because they calculate something using that number. I'm surprised, like, because like Trueflation is like a pretty good measure of this stuff. I'm surprised people like don't base it on this more than anything. Bum, bum, bum. The volatility. Bum, 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 bum. Shout out to the volatility. I'm looking forward to it personally. Especially because like the markets go, like you make so much money shorting, right? Like when your shorts run, like the gains are way faster. Stairs up, elevators down. As long as you catch it. Usually do a pretty good job of managing my trades. Pick my spots pretty precisely. Also very aggressive with my stop loss. I got stop loss break even a lot. I rarely have red trades though. And even when I do, like I don't care. Like the gains outpace it by a fucking mile. Whatever, we know that that's just a worst case scenario. We just fucking lose everything. Even then, who cares, right? No big deal. Life goes on. Worst case scenario. At the end of the day, no stress. They call that risk appetite. That's what makes a great trader. Call what risk appetite? Bum, bum, bum. Caring for account goes to 0. No, I care if it goes to 0, but I'm just saying like You know, I'm talking about like, let's just imagine theoretically a worst case scenario, right? Where like the stock market opens and it just gaps down 99% on everything. I wouldn't fucking care. Obviously unrealistic, but like I'm prepared. If that happened, I'm already prepared mentally. I wouldn't bother me. I mean, obviously it'd be a bit of a feels bad, like damn. We should make it back. We should make it back. Well, it's not like I live some crazy lavish lifestyle. And the amount that I make outscales how much I spend. It's not even close. The only thing I pay for is like my mortgage, like insurance, food, electricity, like the bills to keep my house running. I make enough to pay like 10 years of that in like a week. Maybe not 10 years, but like you know what I mean. We're juicing. Our trades are juicing. An HVAC contractor. Nice. Yeah, I was thinking. I've been seeing a lot of people doing that. Like people going around. There's like one main HVAC contractor that goes around and is buying all the other HVAC contractor businesses in the area, and I've seen it happening in multiple cities. Pretty interesting. Like if I had a wife and kids, like I'd be spending a lot more money, obviously, right? Just kind of whatever makes them happy, so be it. But I don't right now, so and I've never been someone that really like to me. I've always been just like a fucking nerd, just sits on their computer all day. So as long as I have a brand new computer with a comfy chair, I can not care any less or anything else. Which is pretty low bar for spending. Like the bachelor pad meme where it's like a lawn chair in a living room with like a TV on the ground. Like I could easily live my life like that. But I do want to be like a venture capitalist one day, so that's kind of like the main purpose of saving up, so to kind of dabble in that realm. There's been companies like that here. Yeah, I mean, it seems it's pretty smart. Like you kind of like take out your competition and also like acquire all their supplies. Cause I think they're targeting the smaller ones that like aren't particularly holding up well. That's like the main thing they're doing, I believe. I haven't like talking to them to know, but that seems from the outside looking in what's going on. And it's like a service people always need, right? At least for now. Obviously when robotics and whatnot roll around, we have robots doing everything. A different story, but that's like quite a ways away. Like even when like the first generation of like Optimus robots go public and whatnot for Tesla or whatever every other company's doing, I still don't think they're gonna be on that level just yet. A very low overhead. That makes sense. Makes sense. Plus, the other thing about those jobs, I mean, I'm not sure if this is the case globally, but at least like in where I live, most people don't go into that field, like working in HVAC or like a carpenter or a plumber, etc. So in terms of like the supply of workers, it's relatively low actually, and they're all quite well paid now, and it's only increasing actually. Definitely believe the future will have very little manual labor involved. I don't think it's gonna have any labor at all. Like, it's weird to think about the future, right? Like what's really gonna be going on. Because eventually we are gonna have robots that do everything, right? Assuming the human race survives, that there's some extinction level event possible. But like that interview that Elon Musk had on the Joe Rogan podcast recently, like whatever, people have already discussed this before that, but he kind of delves into the idea of like universal high basic income and whatnot in there. But a lot of people have believed that for a while. That's going to be the case. It's like humans aren't going to need to work. Phone never stops ringing. I get tips all the time too. Well, interesting. I didn't know those jobs got tips as well. Because they're pretty pricey, right? Whenever I have like a Sims HVAC service come by, it's always like relatively costly. Value will be things created by humans, socialism, but with robot slaves. Yeah, it's a bit ironic, isn't it? Right? Like the socialist dream, like all these anti-capitalist people, or like the end game of capitalism will essentially be like the socialist dream. Somewhat ironic in that regard. Socialism or exactly. Yeah. But it's hard, right? You know, the problem with all this stuff is that like people are more concerned with themselves and their own life than like the future of humanity. So like they will selfishly sabotage the future for their own gain. Is that right or wrong? I don't know. Seems wrong to me, but I don't think most people look at it that way. Art and leisure will be the economy. Hopefully, because I'm definitely more of like a like AI I'm more leaning towards like the AI doomsday than anything. People hate Elon so much. I feel like he's doing more for humanity than anyone in my lifetime. Oh, but yeah, for sure, by far. People that hate Elon Musk, like, just stupid, right? Typically what it is. Just don't give things thought. Like, how many people have considered the fact that like there's a realistic non-zero probability that like an asteroid can hit the Earth and we all die? Or like that we cannot sustain life on Earth long term. Most people don't even give that thought. He's already has like full-on companies building rockets with the intention of going interplanetary. It's like very forward thinking, right? But people are stupid. They think that this guy just has like $200 billion of cash in his basement just collecting dust, getting eaten by rats. That's not the case at all. What can you do, right? Typically the masses are uninformed. Yeah, exactly. A whole business behind it. Like giving people globally internet, even remote locations. And Neuralink, right? Neuralink's another potentially remarkable advancement. The people that are like paralyzed couldn't speak now have the option to do both. Potential to enhance human cognition down the road, right? And like the self-driving cars is another aspect. How many people have died from car accidents. Like limiting that by like orders of magnitude is like remarkable. It'll also make traffic more efficient, right? Getting to point B from point A to point B will be much faster when every car is optimized to drive like certain speeds with 0 accidents, 0 delays, blah blah blah. They laugh because his test rockets explode. Yeah, people don't understand, right? Like the whole point of the test launches is to like limit test the rockets and see like what causes them to explode, so that when you actually have like a real run with humans in it, it's not doing that. Yeah, there's a lot of brain rot, right? A lot of people just have their brain rotted, and also like the whole idea of like victim mentality. Like most people, like, when you think about it, most people's life sucks, right? They never did anything, never accomplished anything. Like they're not happy with themselves. Like probably not even like in a healthy state. Probably like fat or like obese, so on and so forth. And they just need someone else to blame for everything, right? Because zero accountability. So what's the easiest target? The rich people. Understandable though, right? If you kind of read into like the psychology of like the humans and whatnot, like coping is a very real defense mechanism. Like humans would be suicidal en masse if we weren't able to cope with this stuff. Every eat the rich person I've met. I've met people like that. I mean, I'm single right now and I'm dating, and there's some girls that don't talk. Like when they find out how much I make, they don't even want to talk to me anymore. I'm like, you're so ridiculous. Like, it's actually stupid. Like this is the thing that people don't realize about Eat the Rich, right? Okay, like first of all, let's just write some of this down. Okay, so like people believe that like they have like just millions of dollars or billions, right? It's in basement, collecting dust. Right. First of all, not true. Right. It's not true. And then they make the argument that like, oh, they have this money, because like they're abusing their workers, right? It's the hard workers and the CEOs sitting back in their hammock on the Bahamas doing nothing. Okay, that's not true either, right? Because how do they have, like, if you go look at the top ranked billionaires, how are they all rich? Almost all of them started some tech company. And then they owned a shit ton of the shares when they were worthless, right? They had like 20 million shares when they were worth like 1 penny. And then the stock goes from 1 penny to like $500. So first of all, so it's like on paper net worth, first of all, right? Secondly, they can't sell it. If they wanted to sell it, they can't. Because like, if Elon Musk wants to liquidate his Tesla shares, he loses control of the company. So like, what option does he have? Like, am I just gonna give away everything I worked for the sake of selling this stuff and having it as liquid money? You don't have a choice. You can't. And then the money that is liquid is going into the economy, right? Like, let's just say that they're the most superficial billionaire ever, which Elon Musk doesn't seem to be. But let's just make the straw man case that he is, right? And he goes and buys some like $1 billion yacht, okay? Well, that money is going into the economy, right? He pays the company that built the yacht. Then they take that money and go buy something else. And then they take that money and go buy something else. So they keep stimulating the economy. And then most of the time, like, what are they doing, right? Like OpenAI, for example. Like, why does OpenAI exist and why does everyone get to use ChatGPT now? Because people like Elon Musk and like the owners of Microsoft and whatnot invested in OpenAI with part of their net worth. And that's same for like every company you can think of. They're like pushing it forward, like the sciences, mathematics, through their investments. It's not money just sitting there doing nothing. It's making your grandma's 401k worth something. That too, right? That's the other thing. Like, people don't consider that as well, right? Like, let's say people are like, oh, eat the rich. They shouldn't be billionaires that exist. Well, if you took like Mark Zuckerberg, like Elon Musk, Jeff Bezos, and all of them had to sell their stock, what do you think is going to happen to the S&P when tech is the majority of the weighting? It's going to fucking nuke. It's going to fucking nuke quick, right? That Citibank chart, that's going to be the fucking S&P if they all sell their shit. Because there's not enough demand to take all that. So now everyone who has savings and investment funds, their network's gonna just, right, and then they're gonna blame them again, right? And be like, oh, it's their fault for crashing the stock market. So like, there's no winning with these people. That's the other thing, right? It's like you solve one issue and then they just move the goalpost. And then you solve another issue and they just move the goalpost some more. Look like a shitcoin rug pull. Yeah, exactly, right? Love that Elon created Grok surpassed ChatGPT in 3 months. Yeah, it's quite the interesting build out they had at the what's that? What's that facility where they put all the chips there to train it? Like Optimus or something, or like a XAI training center. Colossus. Like quite the build out. This thing is. They put it together very quickly. I remember watching an interview with Jensen Huang, right, the Nvidia CEO. He was talking about that in depth. It seems quite remarkable how quickly they put that together. And they're planning to scale it too. Yeah, like in terms of like the AI race though, like Grok beating ChatGPT and then like Gemini beats Grok, it's gonna keep happening, right? Like one beats the other and then one beats that one and then that one beats that. So who knows who ends up winning in that regard. It's arguably the world's largest computer, but the way that they compare conventional processing power and AI processing power is different. Interesting. Yeah, I haven't looked too much into the design of it, but I imagine they must have engineered it quite well, right? To do it that quickly and to have it up and running with like little to no issue. Clearly, it was like engineered quite well. Yeah, the thing with me is I'm not a fucking hater. I'm not a hater. I don't have time to sit here just hating on people. But I'm trying to better shit through with my own time, right? I have my own issues to worry about, interesting stuff to learn about. And I'm also someone that takes accountability for everything, right? Even if it's not my fault, even if something's not my fault, I just, in my head, I come up with a way of how it was my fault. It's the only thing you can do, right? At the end of the day. Just sitting around bitching and complaining is not going to get you anywhere, just wasting the limited time you have on this earth in an unproductive manner. Used to be a vacuum cleaner warehouse? Oh really? I thought they built it from the ground up. Interesting. Cause like, didn't they put like some big thing on it you can see from space? Like the letters? Let's research some of this a bit more in depth. I mean, and a lot of it comes down to politics, right? If you realize, like, you know, people used to like love Elon, and then as soon as he like started advocating on behalf of like Republican Party and whatnot, all of a sudden he's some like Nazi grifter. Tesla cars are now shit when they were like great green technology like a week ago. So apparently it was a factory owned by Electrolux, but it was not for vacuum cleaners. It was like they manufactured, like that brand owned it, but they were doing cooking appliances. Why the confusion exists. The company Electrolux is historically synonymous with vacuum cleaners. The phrase "nothing sucks like an Electrolux." Never heard that in my life. What is the logo for this? Electrolux? Interesting. Is this even a brand here? He picked Tennessee because of a hydroelectric dam. Power and TBA. That makes sense, right? It seems like the big issue right now, like the big bottleneck in AI is energy. That's like the real problem right now. Which is why I've been monitoring this one ETF so much. Like I'm a bit late to it, but the solar ETF, like obviously people have been positioning in this for a while, since the tariff dump. And if you look at any of these solar companies and any of the solar ETFs, like they're all starting to pump, right? And in terms of like the chart, like the long-term chart, seems to have a bit of like a Lindy effect going on here. Survive like multiple major like bear markets essentially, but still surviving and thriving. And it seems like this is like one of the only viable solutions for energy, because like everything that build out for everything else is like quite a ways away. Like if you want to have like a gas powered build out, you need to do all the pipelines to route the gas like across the entire continent. And to build like the nuclear reactors, same story. It's gonna take a while to get those up and running. Yeah, it was comical. They said Tesla stock was going to zero. Yeah, a lot of people thought that, and a lot of people think it's just like a car company when it's like they do everything, right? It's like robotics, AI, insurance, energy. They're like these old school shiny metal ones. Talking about the vacuum probably. Next, Elon's gonna put AI processors in space. Yeah, I read that Google is doing something similar. And TAN, yeah, this is like the TAN ETF, I believe it's called. Yeah. There's a couple I've been looking at, but they're all like the same kind of thing, more or less. Yeah, it's interesting, right? Because a lot of people, and I didn't even know this, I found it quite interesting actually, that like in terms of like the Optimus robot, like part of the use case is to have them work like on Mars. And not only that, but also for mining on Earth, right? Because right now the issue with mining on Earth is that humans can only go so low before the heat is overwhelming. But that's not an issue for the robots. Like obviously to like a certain extent, like eventually like, they'll just melt. But they can go lower than humans. So in terms of like having more abundance of natural resources, like the robotics is going to enable that. And then sometime down the road, right, whenever we're like farming asteroids for their metals and whatnot, but that's like ways away. We won't worry about that just yet. Not quite there just yet. Although I hear China's mining some pretty interesting stuff on the moon, or plans to. What is it? Some kind of helium? We live in the craziest time. The stuff that's gonna come out in the next 10 years will be so unbelievable. Yeah, I agree, right? Like the next 10, 100 years, is it gonna like the world is changing at like an exponential rate. People don't realize. Like people think that like the change that we saw from like the 1900s to now is this. Like when you zoom it out more, it's like this is like 1900 to like 2010, for example. But like when you zoom it out like even more, like this portion of the chart is like really this. And like we're about to be entering like this fucking stage, right? This is like 2025, 2026. So yeah, people are not prepared. And I see it all the time, like whenever I talk to people that I know in real life, or I meet strangers and talk to them about like, even stuff as simple as using like ChatGPT and Gemini for like their daily tasks, or to learn stuff, or to like use the agent mode. People don't use it at all. I'm like, man, you guys are not aware what's going on, are you? Not aware. Like I'll talk to people about their jobs, like when I'm dating people, and I'm like, aren't you like, for instance, like I went on a date with some graphics artist, and I'm like, do you use AI at all? And they were like, no. Just right away I was like, okay, that's a red flag. Red flag. Aren't you worried about like getting your job replaced? Like I can literally just go on ChatGPT and make any image I want on a professional level. And they're like, oh, like they're just brushing it off, like as if like people aren't gonna use that. Like they're still gonna want professionals, graphic artists. I'm like, okay, you say so. I mean, I wish you all the best, but I don't think you're prepared. You should at least be integrating into your workflow to help you produce content way faster. People think it's just an AI chatbot. Yeah, basically. Helium 2? I think that was it. I'm looking it up right now. Oh, it's Helium 3. That's what it is. It's incredibly rare on Earth, but it's believed to be abundant on the moon because it has been deposited by solar winds over billions of years, unshielded by the atmosphere. And the goal of it is to have clean nuclear fusion. Interesting. Like that shit is just mapping out three-dimensional molecule structures. You can build stuff we've never been able to. Yeah, that's the other thing people don't realize. It's like, it's not just that okay, a lot of people think that the AI is just some like thing that just spits out the known knowledge. And generally that is the case. But like we are starting to see like edge cases come out where like AI will make some like obscure advancement in like mathematics or like some other science. Like for instance, like Google used one of their like closed-ended AIs to like optimize their databases to save like 2% the cost on their database a year. From that database design that the AI gave them. It wasn't some human that came up with this. So like, sure, at first it'll be like some random small mathematic advancement here, and like another one here, and like another one here. But then these things start to like come together, right? Like this thing helps this, which then helps this to like lead to this. And soon they're gonna be making like major breakthroughs, right? And it's gonna be iterating upon itself. Which is what's scary, right? Which is what's very scary about AI. Like I find it very hard to see a world where like humans survive this. And there's like a whole book on this. I read it. It's called like Life 3.0 by some like famous like astrophysicist. And he kind of just like basically it's like a book of him like theorizing like different scenarios that can play out with the AI. And all of them were like, we're fucked. Like one way or the other, like we're just not gonna make it. But his whole argument is that like this is destined to happen. Like humans began as like little like cells, and then we evolved into like little tadpoles, and then eventually we like started to like wander on land. Then we was like apes, and then we ended up as like humans, right? And like his whole premise of the book is that like we are just the one thing in a bigger chain, and the AI is the next thing in the chain. So like we are bound to go extinct. Makes sense, right? Makes sense. Like the way that he phrased it is that like, like the same way that humans like treat ants. Like we don't go around killing ants like for the lulz just because we can. But if we have to like rip up Earth to build a house or something, and that destroys like millions of ants' homes, then that's what we're doing, right? You don't give a fuck about the ants. So it's not some like malicious evil action, but it's like we are so many orders of magnitude more intelligent than ants that the same thing is gonna happen to us with AI. We're just some like dumb fucking organism on the planet. That's Palantir's entire business model. Like what? Integrating AI into everything? Non the AI's gonna destroy this thing. Hard to say, hard to say. Because the other thing about the AI is like, you can't think of it from our own perspective, right? Because like it's not at the end of the day. Like, what if we create an AI and its whole goal is to like cure cancer, and like the final determination that the AI makes is that like cancer is like only evident in like humans, so that they exterminate all humans, and that like that is to reach the goal of curing cancer. Do I have any macro thoughts on the unemployment rate? Is there like a chart with like a 4-week rolling average of this thing right now? Wait, the unemployment claims come out tomorrow, don't they? Also saw a pretty interesting statistic. I think like now like 10% of university graduates are like unemployed. I can't get jobs. It's like rising. I mean, like long term. Seems like that number is destined to rise, right? Like, in what scenario does unemployment not rise at this rate? Like, you're starting to see it. Like, Apple had layoffs, is like announcing layoffs. Amazon is like doing layoffs and down the road. Companies are hiring less because their employees are more productive using AI tools, / they're just using AI agent type setups to replace employees entirely. But who knows, right? It might create a whole another sector of jobs that we're like not thinking about on rates. Take off the moving averages. I don't know. I expect it to keep climbing personally. What implications that's gonna have? I'm not like a global macro expert. It's hard to say. I imagine it's gonna cause some unrest with people. Because I don't know if it's gonna be like every other time where it climbs and then comes back down, right? Or I think like this time it's gonna climb, and when it does come back down, it's not gonna come back down to these lows again. It's gonna like come down and then just kind of like. It's hard, right? The world's changing. This whole AI thing is not a joke. It's not a joke. I mean, there's a massive job destruction incoming. Massive. It sounds horrifying if you think about that. Maybe. I don't think so. I don't know. No, I think the end game of it is not going to be. We were talking about it earlier, actually. I mean, Lyle. Like the idea that like there's gonna be some form of universal basic income, right? Potentially even like universal like high basic income. To the point where people don't need to work anymore, right? Think about it. If you have like robots that are just running endlessly on solar power and they're like farming all the food for us and building whatever we need, so on and so forth, like there's no need to have a job. But the problem is like there's a lot of pain before that scenario develops. So what happens during that period of pain? Who knows, right? It's going to be probably some pretty high amount of civil unrest. Level of people think that having robots is a better future than robots do all the work. Those will be tax productivity robots. Yeah, I'm in the same camp. Who has given you the resources? The state that creates a lot of problems. Yeah, I mean, I don't know how it's going to be structured. Like, is it just these companies that develop all these technologies paying hefty taxes to be allowed to operate in that country, which then like trickles down to like the population? Is it like state run? I don't know. Like also, mm, like is it a big problem if the state gives you it? I mean, I guess there's the risk that they control it and they can cut you off. But I mean, it's kind of the case already now, right? In some capacity. Prices of things will crater. Yeah, yeah, it does seem like that. I'm optimistic about it. Of like that being the end goal. But like the period in between from like now to like where that occurs is like very sketchy, right? Because like for instance, like okay, like Waymo just expanded its self-driving to like 5 more cities or something. And Tesla, the self-driving is now starting to get pushed out in Europe, and they're also expanding in the US. So like all these Uber drivers, for example, that are about to start getting displaced, like what do they do, right? What do they do? And there is no universal basic income for them right now. And then like truck drivers is next on the chopping block, which is like a huge amount, right? Like you cannot go on the highway and not see a truck driving down the highway for more than like 2 minutes. So what are they all gonna do? Bum, bum, bum. The irony is there'll be more jobs, and the jobs that are better. Yeah, people make that argument, right? Like you'll need people to repair robots, right? That'll be one thing. Potentially, because maybe the robots will do it. That's the other thing, right? Whatever jobs that are created will just be done by robots. But it is true, right? Like as the world changes, like there are like unforeseen side effects that we can't anticipate in terms of like job creation. Oh yeah, I do agree, right? Like I think it is always a bit odd that people are trying to like advocate to have like more factory jobs and whatnot, when most people consider those jobs to be like quite miserable. I'm pretty sure there's like a company in China who had to put like nets. They got in their factory. They had to put nets around the staircases and out of the windows because people were trying to kill themselves while working. So like they put that there to like catch them so they couldn't. That's like when someone invented farm machinery and people were like, "Oh man, what will we do for work?" Yeah, exactly right. Same with like cars. People thought like the people that ran like horse and buggy services were like, "Oh my gosh, what are we gonna do?" And that spawned like a whole new industry of jobs. Oh, I have to go take a piss real quick.
tongue glare. TP hit, I stare. Locked in. Money talk loud, they scared. Plotting in silence, counted the ticks. Late night with charge, no clicks. They mock the math, now I'm rich. Ops got wrecked, I ain't flinch. I ain't flex, just showed the path. Kept it tight, I played the math. Now my circle living like rap. Up and to the right.
I think those things are only semi-automation, not complete automation. Without complete automation, we won't need people to run those machines. What are you referring to? Lyle, I gotta go anyway. Good talk. Later, man. Yeah, you too. Shout to you. Shout to you on those NVIDIA options moves, right? Hopefully the rest of your week goes well. If you're in the US, hopefully you have a good Thanksgiving, etc. It's scary to think about, right? It's definitely scary. Like almost like probability of a civil war probably pretty high. Because you're already seeing it now, right? Like the whole idea of like the upper class versus the lower class is causing quite the heated rift. I don't think introducing a fucking army of AI robots to replace people's jobs is gonna help that out. Also, right, let's not forget that all these billionaires are building like fucking essentially like zombie apocalypse level bunkers for a reason. Building dumb compounds out. Bum, 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 bum. Any new plans for BTC? No, I'll probably do a juice box actually. Yeah, getting pretty late. Probably time to do a juice box here pretty soon. Yeah, I mean I was talking about it a little bit earlier, but I wouldn't be expecting a whole lot, given the fact it's like a holiday in the pretty major holiday in the US. Like compared to the typical weekly volume, we're already like pretty low, right? I expect it's going to get lower as the week progresses. Kind of just getting tighter and tighter for now. But maybe we'll see some kind of like international fuckery going on. That's the interesting thing about Bitcoin. That like I don't think any other does anything else have the same kind of effect? It trades 24/7. I don't know. I don't think so, right? I think this is actually the only thing that trades 24/7. Which has like an interesting dynamic with traditional markets. Because you can be some like entity that just takes advantage of options. You load up on a bunch of like options in one direction and then you just pump Bitcoin, and then any kind of Bitcoin beta is gonna gap up on open. Which a lot of time we see some like weird weekend moves too. I think sentiment is recovering slightly. I'm seeing quite from people being bullish again. I don't know if I'd go that far. Oh, we'll take the sentiment thing on. Oh, that can't be right. Okay, yeah, it's 15. I mean, I don't know if I'd give that too much like thought though. That's usually how it goes on like Twitter and whatnot, right? Like 1 or 2 green candles and people are just fucking calling for alt season again, all-time highs, blah blah blah. There's a lot to develop down here still. Like we only have a couple of daily candles so far, so like this can end up being anything, right? It can just like be like ding ding. Could just like sit here for like a while and go lower. Could start like impulsing off the lows and ripping. It's very hard to say right now. Everything is possible. So far, it's been looking like relatively strong. Move down today was not the greatest, but like, yeah, basically pumped 10k off the lows at this point. So if we start to like do this a bit and then break out and go higher again, nice, nice. And another check mark for the bulls. Because we haven't got a whole lot of retraces yet. They've been like relatively shallow. And last time this happened was like down here, right? Kind of deleted all the boxes now, but it's just too far back, right? Yeah, I was here. I just started leaving behind a bunch of liquidity, leaving behind a bunch of imbalances, and kind of just never came back. Could be the beginning of that. Take it day by day though. Don't want to get too caught up in being bullish, bearish, whatever. Just kind of just let it tell us what it wants to do. Probably the best way to go about it. In terms of a juice box though, shouldn't look at the data real quick because I've been yapping for like 2 hours straight. I haven't looked at this once. So we'll lower this a little bit. And nothing really going on, honestly. It's relatively flat in terms of like any open interest activity. The other thing about this is like, okay, like we've talked about like seeing some like bull traps before. Well, like this would be like the fucking bull trap, right? If this is like the beginning of the bear market, this is gonna be like the giga bull trap if we end up getting it. So you have to be very careful for that. Boom, 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 boom. Am I still a 4-year cycle believer? I mean, I don't know if I ever was in the first place. Like, it's missing my first cycle of trading, so as far as I'm concerned, I'm just trading whatever's happening. But there is a lot of... How do we phrase this? Humans like look for patterns, right? And we also like emotionally react to things like the same way repeatedly. which is why a lot of times you'll see like fractals that are similar in nature play out on the charts. And it's just somewhat like a self-fulfilling prophecy, right? Like if enough large entities believe in the 4-year cycle and they buy and sell accordingly, then it's gonna happen, right? And in terms of like the whole idea of the game, right, of like accumulating and distributing and accumulating and distributing, like in waves, like this is occurring on every time frame, right? But like the largest entities are doing this on the largest of time frames, so it makes sense to be seeing like a cyclical nature to the market in that regard. A lot of people think that the thing about crypto is this, right? There's like two camps from what I can tell. There's a camp A and camp B. And these people are just like 4-year cycle believers, and these people are like liquidity injection believers. And up until now, like these have been aligned, right? Like the presidential elections and like the liquidity injections have aligned with the crypto cycles. But this is the first time where like this is not aligning these two. So we're gonna find out, right? We're gonna find out, is it real, is it not real? Definitely worth noting, right? It's worth paying attention to, but I wouldn't put like all my eggs in one basket. It's like all probability based. The way I'm looking at it is like the bigger that this pullback became, the more the probability of a 4-year cycle being true has started to increase. But it is not 100%. Because like the worse that this became, like the more damage is being done to the chart, which then starts to like alter the psychology of everybody that's playing the game. Because like let's say we pulled back like right here and then started to pump, would people be thinking, oh man, I'm gonna sell the next pump we get because it's a fucking bear market? Not as many, but now a lot of people are thinking that because of what happened. Which means that on the way back up, you're gonna have to deal with all the extra selling that we wouldn't have had to deal with if this didn't occur. So, what did I just do? Like to me, I'm just going with the flow at this point. I de-risked. If we start to reclaim these some key levels and start building value higher, then that's what's happening. And if we just continue to trend lower, then that's what's happening, right? Whether it's a 4-year cycle or not, there's like no difference at the end of the day. Bum, bum, bum. But it does seem a bit odd as well, right? In the sense of like, are the markets ever that easy, right? Is it ever as simple as just saying, hey man, like, buy year 1, sell year 4, and then repeat? Seems like a bit like a bit of a free lunch in some capacity. And also the game has changed a lot, right? We now have like large institutions playing via the ETFs. Hard to say. It'll be interesting to see, right? At the end of the day, I don't know. But it will be interesting to witness the development regardless. In terms of this juice box, or are you guys 4-year cycle believers? We're not. Or maybe it is that easy, right? Maybe it is as easy as having a 4-year cycle. Because most people don't have the patience to play the game on that high of a time frame. which applies to traditional markets as well, right? Like most wealth transfers occur on these like higher time frame pullbacks into like bear markets, which is not really, it's not really a bear market, is it? It's really a reaccumulation market. Is what you really should be thinking of it as. In terms of the juice box, though, lower that. Probably the same as yesterday, right? I mean, you could have been taking this like rotation long earlier today. If you weren't in a trade, got filled on this bounce. Might be break even, kind of chilling. But like that's already gone and passed. So if we came back around, I don't know if I'd be itching to take that again at this like lower level. Maybe if it's like looking good in terms of the data, but like the usual thing when we tighten up, that the less and less edge you're starting to have, the tighter we get. So not a bit gambly, not something I particularly like to dabble in or suggest. But if you're like scalping on the really, really low time frames, yeah, I guess give this zone a bit of thought, especially if there's like low time frame liquidity here. But realistically, it's the same two boxes we talked about yesterday, honestly. And I'll say that this one's like a bit, yesterday we were kind of saying how this one's like a bit less realistic of a zone. Like mainly this one would be like the main spot to be looking. But in terms of like these like triangles and like the fake out probabilities, like this is starting to be a bit more realistic, right? In terms of like a measured move and whatnot. Especially a lot of times because they do this, right? Like ding, 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 ding. Kind of like sweep one side and rip the other. So the probability this one has increased a little bit, a bit more viable in my mind. But don't give it too much thought, right? Because at the end of the day, like, this is just some imaginary triangle. Could just like end up sitting here like much longer and then just kind of like do this. Or start to go from here, so on and so forth. So I should be paying attention to these two like volume levels, basically. Like this thing and this thing. And we talked about those yesterday, so nothing's really changed in that regard. The only really new trade will probably be flipping the value area high and going. If you can like get above the zone, start to do this. Probably gonna be your best bet. Kind of flip the value area high. So we'll kind of just write that down. So all longs discussed yesterday still in play. What's that for? Into like a bullish retest. The PD value area high. Imaginary yellow line, etc. I'd probably wait for the retest too, right? Because there's the poor low up here. Kind of same story that we talked about. Where was it? Here, when this thing was printing, we said like they don't get got on the breakout. Like wait for the retest and then take it if you want. Same kind of story with this thing. Because there's a world where it just comes like sweeps the highs and then just keeps going lower again. And like, yeah, that covers it, right? We covered everything deeper than this previously. Not really much to talk about. In terms of the shorts, hard to say. Hard to say. We already did this thing, right? Like a failed auction to Valerie High. And it's gone down ever since. Maybe we get a retest of like this zone. But like the same kind of story as like the long, right? It's like this tightening range, very low time frame scalp. Not particularly, find those particularly interesting. Yeah, ideally you got in on like either this one or this. Well, we'll mention it, right? If we get something like that, like a retest on a more meaningful time frame, because that was like the 3-minute. Maybe we do a bit more meaningful of a test of the VWAP. Oh, so where's yesterday's VWAP? Yeah, I mean, okay, you can entertain that if you want, and then same kind of story with how we were saying with the long, well, like this like lower time frame level, like same story up here, right? Potentially, right? If you come up here to like sweep these highs, if there's low time frame liquidity, you can potentially entertain that too. Like basically sweeping this high, right? Cleaning the poor high and coming back. I haven't been looking at the liquidity and whatnot, so like check yourself and see, but I'm gonna like clean the poor high. We won't write down like this low time frame one, but be mindful of it if you're gonna be looking at this stuff. Other than that, realistically, this high time frame stuff we talked about up here is like still in play. Nothing has changed in that regard. So higher levels. I'm gonna say everything we talked about yesterday. All shorts discussed yesterday still in play. Like the bearish retest of these zones in the higher time frame below and the stuff up here. But we will also say this though, in terms of like the fib we had drawn for the potential long. If we start to lose the Valerio low, like bearish retest of this stuff, you can entertain this, right? Kind of get in before grabbing this liquidity. It's like the bearish retest of the PD Valerio low. And also, like, it depends how you want to play this, right? If anything, like, wait for like this structure to actually print. Because there's a world where we just come down here, like, tap this, and then just come back and start ranging, right? So if anything, like, wait for this to print, and then you can get in with your stop here. Or some, like, low time frame structure, whatever. Whoops. Yeah, not anything particularly interesting going on here, right? Which is usually the case when you start to get tight like this. At this point, you probably missed most of the moves, the juicier of moves. Yeah, other than that, not too much to yap about on the juice box, honestly. Yeah, we're kind of just waiting to see where we go. Get rid of this, delete this thing, delete this, who cares? Let's do a bit of a chat shout out and get our out of here. How long has it been? I think we did the 4 hours. Yeah, we hit our 4-hour mark. Nice juicy yapping stream today. Watch some trading interviews. Took some notes. Although it was all like normal shit, right? A lot of common sense stuff that I've already been talking about. Clearly they're watching my stream before getting interviewed. If anything, I need to be in these interviews, right? They need to be interviewing ya fucking boy. Put them onto a real trading game. Get these like rank 10,000 noobs out of here, man. Triple digit rank only. If Anyways, I'm not gonna shout out these fucking bots. I don't even know where those people even came from. I mean, shout out to the bots, I guess, right? Fuck it. Spamming about some, shilling some garbage in the chat. But shout out to Lyle. Had quite the shout, Lyle, today. I think that was it, right? Other than that and Harris. Yeah, shout out to Lyle and shout out to Harris, Kamal. Some old faces, some new faces. Do you think we can hit 250 subscribers by Christmas? That'd be pretty crazy, right? It'd be pretty crazy. It's a quarter of a way to 1,000. I'm surprised we've made it to like 15. I don't know why anyone watches me. I'm fucking brain dead. But yeah, we're back tomorrow, usual time. Curious to see if anything interesting goes on here, or if we just kind of spend the rest of this holiday week chilling. Whatever, either way, we'll kind of be here doing something, right? Nerding out in some capacity, ranking up in some capacity. Until then, I'm out here. I'm tired. Get some sleep. Later. 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 Late.